Hello everyone, very good morning to all of you all. Yeah, I just need to know whether we are audible and visible. Yeah. So welcome everyone. Yeah. Very good morning to everyone. So yes, we are going to understand the SBR and a bit of the revisionary part that we are going to cover about the SBR. So basically, what is SBR? Which is the paper? What is the paper pattern? And which is this professional paper? And what are we going to understand about the SBR? Okay, so before introducing what are the subject and what are the course content that we are going to understand in this revision series, just we need to understand what is actually SBR. That is strategic business reporting. So normally when I talk about the reporting of the financial statements, we know that in the reporting framework, we do have the financial statements, that is a set of the financial position, that is the balance sheet, then the profit and loss account and the other comprehensive income. Then we do have notes to accounts, which provides it with lots of disclosures, and finally we do have certain balances which provides the proper financial statements and a set of financial statements. So any ways you will be telling, ma'am, we are having so much of the reporting, that is a financial position, SOPL, then we are having other comprehensive changes in equity, cash flow statements, notes to accounts. And that is all reporting. So you will be telling, ma'am, that is all we have learnt in financial reporting's FR also. Then what is SBR? When we have studied, or when like most of you would have given, or if you all are from the direct with all the exemptions and then you are giving the exams of first P level paper, that is a professional level, then SBR will be the first time that you are going to attempt. But in case if you have already given the papers, so obviously you would have given the financial reportings. So SBR is a higher version of FR. So you will be telling all these words, that is the financial positions, the statement of profit and loss account, cash flow statements, everything is learned when we were in the colleges or initially, or when we have entered into the world of commerce, that is in the 11th and 12th. Okay, but then what is further which we need to learn in SBR? When I talk about strategic business reporting, so reporting is something which we know, but what is the strategic word in that? So strategy shows us the basis, not just in the terms of financial figures, but it is beyond the finance, Now what is the meaning of beyond finance? Strategy means we need to think something huge. That is not just the financial figures, but the most important thing which we are going to understand in SBR is not accountancy. Accountancy can be done by any of the accountant, but we, being at a professional level, that is in the professional examination, they are not just going to test the numbers, but they would want us to interpret things, to analyze things, and to discuss what is the need and why am I going to report in such a fashion. For example, if I tell you about the reportings, we know in the financial position, we have balance sheets, that is the assets and the liabilities. If I normally talk about assets, what is the definition of assets? Oh, is these asset going to satisfy the definition of asset? For example, if I am having a property, plant and equipment, that is PPE. So we need to understand, suppose I am having a property, plant and equipment worth 1 CR. And I thought that, okay, let us write in assets. Where are we going to write an asset? Is it a current asset, non-current asset? What is the hierarchy? So that is something which we need to learn in SBR. So before going into the crux of SBR, I would just want to give you an overview of what is the course content of SBR. So in SBR, we have learned, I know most of you would have completed your all studies. It is just a revision, but still I'll tell you, SBR consists of IFRS. What is IFRS? International Financial Reporting Standards, and some IAS, that is International Accounting Standards. So what is the combination of IFRS, IAS, ma'am? What is this? Okay, So IASB board, that is International Accounting Standard Board, was the board which has constituted some guidelines, some standards which will help us to understand not just the financial figures of our country, but for example, if I understand Hindi and if you all understand English, so there should be one common language in which we can communicate. If people want a common language, why not the accounts would want? So at the time of accounting language, IFRS is a language which helps not just the people in the country of the relevant gaps, but also the people of other country, because we know today the world is not just shrinked into a place. No. Today the world has gone a way beyond, where I am not concerned with just my country's financials, but I would like be more interested in knowing their financial items too. So yeah, with that overview, let us start with the SBR revision series. So before introducing the syllabus, let me introduce myself. Yeah, I am a chartered accountant, Ashwini Bhanushali, and I am teaching the ACCA subject as SBR is one of my favorite subject. In ACCA, I am teaching SBR. I have also taught DIP IFRS, then ATAX, tax, APM subjects, and last 4 years. I am your faculty at ACCA, that is in IIC, Lakshya. So if I talk about Lakshya, what is Lakshya? The meaning of Lakshya means aim, a vision where we have to understand. As I am the part of Lakshya, I feel our community is at a greater pace where we can have and we can together make a journey towards the beautiful success of commerce. So I have been associated with the Indian Institute of Commerce, Lakshya, where it's not just me and not just y'all also, but it's everyone whose growth in the commerce has reached to the top notch. So before introducing the subject, let's go ahead with what is Lakshya. What is Lakshya going to provide us? Where are we going to stand if we are associated with Lakshya? So if I talk about Lakshya, it is something I know everybody would be knowing Lakshya, because the marketing, the knowledge, the know-how that they impart is something beyond. It's not just the faculty, it's not just the students, but together we make a success. And over here, Lakshya. So we have earned, as I am the part of Lakshya and a Lakshian, we have earned a great reputation, and being a powerful institution, we are the advisor where we are going to study what? Lakshya provides with lots and lots of the studies where the people or the candidates can learn CA, ACCA, CMA, CMA US, CMA India, CS, CAT, CMA and BVOC. That means all other courses which the Lakshya provides a knowledge for. No matter it is CA, ACCA, CMA US, CMA India, everything. That means what? It is not just providing the professional course, but it's providing a journey where we can be successful in the field of commerce. So over here, we are providing the platform for availing the course in the syllabus by making it as a single point of destination. Like whatever knowledge we need to get in the field of commerce, Lakshya is the one-stop solution. And Lakshya is very well being known for providing the teaching and the training for ACCA course in Kerala. If you just figure out the Kerala, it is being flourished by Lakshya, and we are consistently striving to maintain the best of among the ACCA coachings. And the coaching is also offered with lot more knowledge. With all the syllabus, no matter it is the bookish knowledge or the real world knowledge, the experience, the knowledge, the skill and the ability are beyond. So I am the faculty at Lakshya having the online classes, that is in the English batch, and providing the knowledge for SBR. So we are over here having the online and the offline classes, both the languages, that is not just in Hindi but then in English too. So those who are more of understanding complete English, so they can join English classes, and the one who understands Hindi as well. So yeah, we have English, that is Hindi plus English classes. So yeah, that is all about Lakshya. Now, before I go into my revision plan, that what are we going to cover in this beautiful 5 days of our syllabus, let us understand the first core concept of what is SBR. Okay, the syllabus, the knowledge that we are going to understand, or maybe I really wish that you all would have understood, like for once you all have gone through the syllabus, so you must be having a thorough knowledge of what the standards are. But yeah, it's just, let's once brush up the things, okay? And I have told you, okay, let me show you what Excel. Yeah, we need to be good at Excel and the Word as well, because our examination is going to consist all those things. Yeah, so I'm just making it bigger so that we can easily understand. Okay. So we are well aware of what is SBR. So the word SBR means strategic business reporting, where we are going to learn many IFRS. So if I break out the word of IFRS, what is IFRS? So you will be telling, ma'am, we know the full form, that is International Financial Reporting Standards. What is international? What is the meaning of international? Something which is not just like surrounded in the country, means it is something which is global, which is not just based in the country itself. That is something which can be global. What is F? That is finance. No matter it is in Indian rupees or dollars, everything is known and everything has been channelized in IFRS in such a phase that the people can understand this. What is R in that? Obviously, ma'am, reporting. Reporting means we should understand, okay, at what phase, in which criteria, is it an asset, is it a liability? No, ma'am, that is not an asset, this is an expenditure. Okay, so who is going to tell us? So that is something in the reporting we are going to understand. And what is S? Again, the standards. That is all the rules and guidelines that the standard possesses is all about IFRS, that is International Financial Reporting Standards. So if I just normally talk about the financial statements, yeah, just taking a word of R, that is reporting. If this is my financial positions, okay, let's take a financial statements. So what are the things which are inbuilt in the financial statements? So we do have a group and a consolidation, basically a group of what things. So basically we'll be having a financial position, yeah, that is nothing other than the balance sheet. Cool. Then we'll be having a statement of profit and loss account and other comprehensive income, that is OCI. Then we do have cash flow statements. Obviously we do have statement of changes in equity. So basically in equity I'll mention over here. And then obviously the most important disclosures, that is basically the notes to accounts. Yeah. So this is all the set. Who is going to suggest where should I post this thing? So normally as an accountant, what do we normally do? Okay, we go into some like the offices or maybe in the manufacturing unit or whatever it is. We check the transactions what they have entered into. After understanding the transactions, being an accountant, it is our responsibility to post that, to record their journals, and after recording, after summarizing the transactions, we finally end up and prepare a financial statements. So it is normally an accountant who is going to do that. Do you really think that it is the responsibility of the accountant to make the judgments at a pure base? Yeah, obviously. Means being an ACCA over here, like for example, within some time you guys are going to be ACCA. There is a globally associated with the chartered accountants. Okay, so if it is upon you all, if you manipulate the financials, will that be fine? If you manipulate the financials, will that be fine? So you'll be telling, ma'am, it is not fine, but if I want, I can manipulate it. But is it so? Can I just manipulate the financials because of my personal needs? So over here, the ACCA, the Association of Chartered Accountants, have clearly mentioned this clearly, that it is the ethics, it is the roles and responsibility of the auditor as such to maintain the dignity, to maintain the ethics in such a phase that you cannot on your own discretion manipulate the items, because it's not just one company, it's not just one country, it's the global association which is gonna be dependent and which is gonna trust our figures, like whatever we have been finalized. Yeah. So to a greater extent of the economy, it is our responsibility to maintain things at a proper pace. So when I talk about financial positions and the SOPL, one of the most important thing to understand in IFRS is the criteria. What is IFRS? So what are the criteria? So we normally consider it as an RMPD. What is RMPD? See, IFRS, whatever standards you take, sir, ma'am, whatever standards, like any damn standard we take. So we know there are many standards. If I take any of the standards, we have to figure out the first thing, that is R, that is the recognition criteria. Recognition criteria. Then what's recognition criteria then? If I want to recognize, is these financial statements? Yeah. So I have to understand, for the first and the foremost thing I have to figure it out. Okay, is this whatever accounting I am planning, for example, is it like an asset? Is it a liability? So who is going to suggest that? So that has been something told and been analyzed with the definitions. So the recognition criteria is the first and the foremost criteria which we need to meet, only then we can show. Okay, Baba, like for example, if I'm talking about asset, if it is property, plant and equipment, so it should first of all satisfy the definition of an asset. So what is the definition of an asset? Asset means it is something which the company or the entity would have purchased in past. So there should be an event in the past which assures a future economic benefits. That is, in future you should get the benefits. Oh, is it so much? But that asset should also have a position of the entity should have a total control over the asset. That means when I talk about the recognition criteria, if I want to understand whether my property, plant and equipment is satisfying the definition of an asset, so we need to figure out, okay, if it is an asset, it should be something like the entity would have purchased in past, in future they should have an economic benefits, and the entity should control it. Along with that, the cost should be measured reasonably. If I am good with this, then I can record it as my asset or liability and whatsoever the things are. So the definitions are to be first met. After meeting the definition and after understanding, okay, this is a criteria, okay, this is my asset. For example, if it is PPE, I understood property, plant and equipment. Okay, this is my asset. Then what is M? M is a measurement criteria. That means, okay, I understood this is my property, plant and equipment. Let's say this is my asset. What value will I measure? What is the financial figure which I have to measure? So that is something the measurement criteria satisfies us. Okay. So I understood this figure also. Basically, the property, plant and equipment is been measured initially at a cost. Then what about the year end? Yeah, we know that every year on PPE, we normally charge a depreciation based on the useful life. Is it so much? No. So you will be telling, ma'am, after getting that, now after deducting depreciation, we get a carrying amount. And that carrying amount is something which we are gonna compare it with the fair market value. If there is any gains and losses, yeah, we are very much aware. I think you have understood, you would have said the word on your own, that it is nothing other than, should it be booked in P&L account? Yeah, ma'am, P&L, profit. Not at all. It should be booked in other comprehensive income. There is something like a revaluation reserve. So yeah, that is something which we have learned in property, plant and equipment. That is International Accounting Standard 16. I'm not going into the details of the standard. It's just an overview what I am giving you. Okay. Measurement. After measuring, okay, I got the value. Okay, this is a cost or whatever. Cost or fair value, whatever you think. Let's take it as a cost. I got the value. Okay. Then, hey, can I do like that? Acha, I want to show ma'am the financial statements. I want to write cash and cash equivalents. Then I will write debtors. Then I will write property, plant and equipment. Then I will book bills receivables. Then I'll write inventories. Then I'll write investment property. Is it allowed? No. For presentation also, you should have a perfect picture the way you are going to book in your financial statements. So that is something, the criteria is satisfied by the presentation. So basically we are going to learn what is presentation, how are we going to form it. So the base pro forma is also to be learned. Like if I wanted to show more assets like cash, I'm having more cash in bank balance, so let me show it first. So that is not allowed. The pro forma is already fixed, and this is the schedule which we have to follow while presenting the financial positions. Okay. And then at the last, what is D, ma'am? What is D? D. Disclosures. Hey, why are disclosures given so much importance? See, when we were in 11th and 12th standard, or maybe in colleges, we were just more emphasized to make the financial statements, to write the financial figures. But being at a professional level, you must be aware that maximum of the frauds or manipulations are done when we can manipulate the disclosures. If I just give you an example of IS 24, yeah guys, you should remember which was the standard. What is IS 24? International Accounting Standard 24. Guys, it was related party, yeah? So for example, if I have made a lot of purchase and sales to related party, a lot of transactions, ma'am, there could be a chances that there could be a manipulation. Why? Maybe the transactions are not dealt at an arm's length price, or maybe just because of the benefits to some other party, I would have like manipulated things. Or maybe because my company is having some, yeah guys, you need to remember contingent liability, contingent asset. What it is? It is the International Accounting Standard 37, which says if it is a contingent liability, means the liability is there. So what is liability first of all? Ma'am, in the past you have did something, because of that in future you have to pay. Yeah. Okay. So what is contingent liability? In past I have incurred some expenditure, like I have incurred something. Like it could be in some cases, like for example, if it is a court case and the results and the future outcomes are which, like the entity is not sure, it is beyond the entity's control, but the outcome has been decided in the future, and if you feel that the company is gonna be liable to pay, that is understood as a contingent liability, and along the possibility will be there. Yeah, something guys you should recall. If it is less than 50%, if it is not probable but just possible, then we were also showing way. Ma'am, I don't want to show, let it be now. What we'll do now, just imagine if on my company there is a court case going on, okay, and you feel that the outcomes will be good, means you need not pay a liability. So you thought, let it be, forget now, we'll not show. It's just, ma'am, 30% chances, it's ma'am just 40% chances. Why to write? But if you are not considering it, then don't you think we are manipulating with the minds for the users to take the decisions economically? Yes, ma'am. So there comes the disclosure, which again becomes the most important thing. So if I am telling about the IFRS, RMPD is the best criteria, that the recognition, measurement, presentation and disclosure. If I go on further with the IFRS, let us quickly revise, and then we'll go with our course content. What are we going to understand? Okay. So if I talk about the assets, basically the assets are bifurcated into non-current asset and current asset, NCA. What is non-current asset? Ma'am, which is other than current asset? Then what is current asset? Current assets means what I am thinking, what the company is thinking, that acha, I can realize it within a period of 12 months. That is, if it is a debtors, I can get the money within 12 months. Or it can be satisfied in the normal operating cycle. Cool. Non-current asset means something which is beyond 12 months. Yeah. If I talk about property, plant and equipment, guys, you should think for a while and tell me what is the standard that we have learned for PPE. It is IAS 16, International Accounting Standard 16, in which we have learned the criteria for PPE. I'll just overview the things. That is, if I'm talking about PPE, that is IAS 16, it normally says that initially the PPE should satisfy the definition of an asset. Then you have to record it at a cost value. Okay, ma'am, I got the cost, initially I recorded. Then there are certain subsequent expenditure, guys, you should like recall, yeah. Then depreciation has been charged, getting a carrying amount. After getting a carrying amount, it is my responsibility to analyze which model am I following, and now today it is compulsory that we have to follow the revaluation model. So what I'll be doing, I'll be considering the carrying amount, and comparing the carrying amount with what? I have to compare it with the fair value which is relevant in the market. For example, it's just an example, yeah. Suppose in my books of accounts, my carrying amount turned around to be like 2 lakhs, yeah. And if you checked it out in the market, you got the fair value at, like suppose the fair value is understood at like 4 lakhs, no 4 lakhs, so let's take 350, yeah. So you will feel, ma'am, that is a good thing, right? You're getting a gain. Yeah, ma'am, I'm definitely getting a gain. So I'm having a gain of 150. Hey, where is this gain going to go? I don't know. Ma'am, it's a gain now. Why not to charge in P&L account? But we know. Is this a gain something you have actually realized it? Not really. Not really. If I have not actually realized the gain, means whether I have sold that asset? No. Whether your intention was to sell the asset? No, ma'am. My intention for PPE was to do what? Yeah, ma'am, my intention was, chalo, I'll use that property, plant and equipment and I will generate revenue. How? I'll make outputs and I'll generate revenue. That's all. So then this gain is to be booked in other comprehensive income. Okay, this was just once I have explained you. Forget about this. I'll just delete it. Okay, so in PPE we have learned already about the International Accounting Standard 16. Then we do have some investment property. Hey, what is investment property? That is also something which we have learned in IS 40. Okay. Investment property means, ma'am, you are having some extra money. Yeah, you will be telling like, ma'am, I am having extra money. But I didn't thought what business to be done on that. Okay. So I had extra money. So I just invested in some property to get the capital appreciation. Means as in when the valuation in the market of the asset is going to increase, you will be getting a capital appreciation. In front of that, you will be also expecting a rentals. So that is what is the investment property. I'll just give you a crux. In the investment property, how am I going to record? If you want to know the details, like I normally presume that like the exams are coming near, so you must be getting the things at a very easy notch. But then if you're planning to give for the December, so we do have an upcoming classes from the mid of September that we are going to cover like each and every standard into the details. So if I talk about investment property, normally investment properties are to be booked at cost. No. Before it was initially recorded at cost, but now, ma'am, in the market there is a fair value. So now is it compulsory to record at fair value? So basically the standard has for the first time given an option. Option means you can either choose to record at cost or fair value. But whatever choice you are possessing, na sir or ma'am, whatever choice you are possessing the students, it should be followed consistently. Why consistently? Like I thought in the current year I want to inflate my asset. I showed it a fair value. In the next year, no, not so much inflate. I want to decrease. So I showed it cost. No, that is not allowed. Whatever policies we are following should be at a fixed place. So it should be at a constant. Okay, that's cool. So yeah, that is also fine for the investment property. Then if you remember IFRS 16. Yeah, remember what is IFRS 16? ROU asset. Hey, what is this ROU asset, Baba? Right of use of the asset. So what is right of use of the asset? Do you remember when I normally talk about the leases? Yeah, when I normally talk about leases, there is a contractual relationship between the lessor and the lessee, where the lessor is very rich, like we can understand, but then the lessor is actually the owner of the asset, and the lessee comes and says, see, I don't have money, but I need that asset. Why? For the production process or whatever it is. Can you please give me on lease? Okay, so they'll be fixing a rentals. Okay, I'm having a lease rentals and all. Okay, so everything has been fixed, and whatever the lessee is obliged to pay, like for example it could be a 3 years lease, year 1, year 2, year 3, but it is fixed. So can I consider it directly at the 3 years lease? So they told no, we have to bring that asset to the present value, and if we are bringing it to the present value, this is where we are considering it as an asset. So ma'am, you are telling that if it is a lessee, still I have to record an asset? Yes. Before it was not as such. Before only the lessor was the one who was creating the asset. Now it is the lessee who is going to show asset. But is it that asset which is being owned by the lessee? So it's not that. It's basically ROU. What is ROU? That is, the lessee will be having the right of use of that asset, which is something which we have learned in IFRS 16. As it is a revisionary course where I cannot go into the details of the operating lease and finance lease and so on, but then it's just an overview which I am expecting you all to know. Cool, then it's fine. Okay, so these are basically the standards. Then do you remember IAS 38? What it is? Yes. Intangible assets. Yeah, intangible assets. So what are basically intangible assets? So you will be telling, ma'am, which we cannot see, which we cannot touch is an intangible asset. Yes. Then we know some examples also. Yeah, you will be saying, ma'am, copyright, ma'am, patent, goodwill. Okay. I'm emphasizing on goodwill. Wait. So patent, copyright, trademark, goodwill. It could be some softwares. Yeah. So we are going to book as per IAS 38. I'll just clear things one. Do you know what is research and development cost? Research and development, there is a cost. Like for example, like just a random example, if I am in the need to prepare a formula means a pair, like something like that, for preparing the vaccines of COVID. Okay, so I entered into making the formula. So initially the things are not going to get ready, right? So I'll be entering into a research phase where I'll be having a lot of expenditure. That is very cool. So a lot of expenditure, I'll be appointing the scientists, we'll be having the labs, etc. So a lot of cost is for sure there. So should I book the cost, like a wholesome, a lot of cost? Should I directly show in the profit and loss account as an expenditure, or can I consider the research cost where I'm going to have the knowledge, I'm going to search for the things, as an intangible asset? So most of you would have already given the answers, but then I'll tell you, it is always to be shown in the profit and loss account. Why? Because when we understand the definition of a bare asset, not intangible, but still if it is just an asset, we should know that the entity should control, the cost should be measured, and sure the future economic benefits should be there. But when we are into a research phase, we are not sure, we are really not sure that whether I'll be successful in getting that, whether I'll be successful in completing the project. But once I get a technical feasibility and a commercial viability that, okay, Baba, if I'm having the asset, it is sure that it is gonna be used in the future, or I can generate economic benefits from that. Then it enters into a different phase, which is a development phase. And now the development cost is to be booked into the intangible assets, and it should be capitalized. Yeah, that is cool. So we have also learned that. Oh, do you remember, guys, there was one grant which we were getting from government? Like if I'm doing some very good thing, or else if I have implemented a factory in the very backward area, or else if I'm giving a lot of opportunity of employments to my employees, so that means the government will be very happy. The government will feel that we guys are contributing to the economy, and maybe if they are happy, they will give us some grant. In case they give us some grant related to asset, or there are basically two types of grant, to assets also and for income also. Okay, just taking an example for asset, then even that is to be booked as per IAS 20, International Accounting Standard 20. So what should we do about the government grants? So basically grant related to asset, but normally I'm recording it over here, but it should be reduced from the cost of an asset. Okay, it should be reduced from the cost of an asset. Okay, when I was talking about intangible asset, I have given an emphasis on the word goodwill. Yeah, do you remember goodwill? So ma'am, you're telling goodwill is altogether a different, means that goodwill is not an intangible asset. No. Goodwill is an intangible asset, but the definition of intangible asset says that the asset, whatever you are possessing, it should be identifiable, it should be separable. Like in the initial years when we were kids, we used to understand, we used to record goodwill, internally generated goodwill also. That means if I thought, oh, my company's reputation is superb, let me book a goodwill. So it was okay before, but today it is not allowed. That means whatever you are generating internally is not acceptable. So what am I supposed to do? So for that, we are having a standard which talks about IFRS 3. International Financial Reporting Standard 3 talks about the business combination. What is business combination? So this is what we are going to learn because in the revisionary class we are going to cover the most important and that concept which the students are feeling, ma'am it is changed, ma'am it is changed. What it is? Yeah, I know everybody will be knowing the change in the consolidation. Is the syllabus change? No. It's just the way the questions are to be formed is changed. So we are going to practice in such a phase that in case if the question comes, we should be able to manage that question. Okay, fine, that is cool. Then what is IFRS 3? Yeah, the business combination. If I am the one who is having very much money, so I want to acquire that business full. So what am I supposed to do? You should, I think you know it, but let's revise it. Okay, we are going to take their total net assets minus, like total assets minus outside liabilities. So that is net assets, which is nothing other than their equity portion. Cool. So I have to think, achha, this is my equity portion of that company for which I have to make a payment. If I make a payment which is beyond that, that extra amount is a goodwill. Don't worry, these questions are to be done, like I am going to do it along with the consolidation for the goodwill's treatment. Yeah. So yeah, that is IFRS 3. Okay. Before moving ahead, I would like to show something. Okay, yeah, let's see. Okay, in this intangible assets, so IS 38 is covered and a portion of goodwill is to be understood and to be reported as per IFRS 3. So for just assets, we have so many standards. If we are obviously having so many standards, don't you think individual standards are too important for us to understand? Why so? Because individual standard is going to tell us what is the recognition criteria, the measurement criteria, how am I going to present it, and what are the final disclosures. So yes, so all the standards are there in syllabus. Then if I go into the liabilities side, we know in the liabilities normally we have an equity portion which we normally understood as a changes in equity, statement of changes in equity. What is that? Whatever equity I am possessing at day 1, it should be added. It should be added with the, in the case if I thought in the current year, let us introduce more equity. Let us issue more equity. So if I have issued more equity, then even that is to be added. Yeah. If you remember, if I have added like securities premium, or I am having any retained earnings. Yeah, so what is retained earnings? Like for example, in the current year's profit and loss plus the OCI plus the retained earnings, everything is to be added. And from that equity, in case the company would have paid what? Company would have paid the dividend and all, so that is to be minus. And then finally we get the closing equity. Yeah, this is what the change is in equity. So yeah, equity is cool. Hey, over here you will be telling, ma'am, you have not recorded the other assets, for example cash equivalents. For cash also we have IS 7, cash and cash equivalent. That's cool. Then debtors, we are having bills receivables, loans given, investment in some companies. Yeah, for investment in some bonds or debentures or shares, it's the most important standard. Again, the most important standard, which is IFRS 9, which talks about investments, which is nothing other than the financial instruments. So even that is something which is there in the course. After completing the equity, we know there are many other provisions which we need to book. So for provisions, we do have International Accounting Standard 37, IAS 37. So it's not just limited to these much standards. If I go into the course content, it is very beyond. So I'll just read out the course content. Okay, for us, if we are going to record all these things, yeah, in case if it is a P&L account, I know for P&L account the most important line item is the revenue. How am I going to book the revenue? Even that is being learned as per IFRS 15, which talks us, okay, if this is a revenue, when should I book the revenue? Should the revenue booked in the current year, or can I defer the revenue? Okay, what amount of revenue should I book? I want to show ma'am more profits. Let me book more revenue. So everything is not allowed. So basically, we are having in the course the financial reporting framework, the background of how the assets, liability, equity is there. Then the reportings. Then basically we are having the non-current assets, which includes inventories, IS2. If I talk about just non-current assets, it's the property, plant and equipment, investment property, ROU asset, intangibles. Then agriculture also. What is agriculture? For example, if I am into a dairy business, okay, so I'll be having cows, buffaloes. So basically that all my livestocks, even that is to be booked as per IS 40. Okay. After completing that, we are having a current assets which shows us the inventory. So when will I book the inventory? How should I book the inventory? Even that has been learned in International Accounting Standard 2. Then the most important concept is the financial instruments. If I just give you an overview within like 5 minutes, it will be not sufficient, but then financial instruments is again very important. Why? Because it is a contract between a financial item, that is an asset, which is a contract between a financial asset along with the financial liability or equity. For example, in one of my books of accounts, if I have recorded investment in debentures, so somebody else has to record my name as the financial liability for him, because for me, I'm going to pay him. Like if they would have issued a debentures, I would have made the investments. But in future, I'll be having a contractual cash flows. So this is something which has been amended or given more emphasized in the examination. That is, we have to test for the business test model. If I talk about business test model, means the company has to analyze what are you more interested into. Are you more of interested into holding that debenture? No, I'm not hold. I want to sell it off before maturity. Okay. Are you into the trading purpose? Or it's just like, no, I have initially thought of holding it for a longer period, but in the market, if the valuation is good, I may sell off. So if these are certain different models, accordingly we are supposed to bifurcate the things. Bifurcation in which phase? Okay, so that is to be booked as per 3 models: amortized cost model, fair value through OCI, fair value through P&L account. So these are basically the models in which we need to bifurcate it. Okay, after completing that, basically we need to understand some concept of derivatives. What is derivative? Ma'am, that betting, yes. So I think it will be your favorite subject from FM, financial management. Ma'am, what is derivatives? Ma'am, that call, put, options, So ma'am, why are we understanding in SBR? So basically we are not going to understand the course and what the derivatives and futures are, but it is nobody can leave our syllabus, our subject. Why? Because everything which is there practically it is to be presented in the books. So how are we going to present or show in the financial statements is what is learned in SBR. So basically we'll be having the financial instruments, then the important concept of leases, which is normally tested in the papers. Like a theoretical part is also being tested. So if I give the emphasis, the leases are important, the financial instruments becomes important. Then we have employee benefit. What is that? International Accounting Standard 19 talks about employee benefit. So you'll be telling, ma'am, what is employee benefit? Yeah, ma'am, you know? Sir, ma'am, do you know what is employee benefit? The employees are getting some bonus, some incentives. Yeah. When should we book that? Ma'am, they are getting some different types of benefits that are normally bifurcated into 4 parts. It is a short-term benefit, long-term benefit, it is post-employment benefit, and a termination benefit. Initially, termination benefit was not there, but now they have also introduced that. What is short-term benefits? If an employee is going to get any benefits, this is my reporting period. My reporting period ends, and within a period of 12 months, if he is going to realize the benefits, that is a short-term benefits. Okay. if this is the accounting period and not within 12 months, after 12 months, that is a benefit which is going to be expensed out or is to be recorded after completing of the reporting period and beyond 12 months, that is long term. Okay. What is post employment? Once my employee is going to leave now, ma'am, at that time they are going to get the provident fund, the gratuity. Okay. After the employment is over, whatever benefits they are getting is termed as a post benefit. Okay, post employment benefit. And at the end, there is a termination benefit, means as and when, if the company feels, you are fired, okay, or the employee says, I want to go, okay, at that time, if any compensation, VRS or whatever they are receiving, that is termination benefit. So as per for the examination perspective, post employment benefit is very important. Why? Because just imagine as so, ma'am, if you are going to get retired or as such after post benefit, like after your employment is over, like for example, a normal company in India gives a gratuity after 5 years of employment. So if I think I'm going to leave this company after 5 years, so I'll be getting the benefits. So do you think the company should book the expenditure only at the 5th year end when they are making a payment? Yes or no? Yes, ma'am. Why should they book early? No. Do you really think? No. As a matter of accrual concept, the employer, the one who is actually holding the things, the company has to book an expenditure over a period of time in which the services has been received. That means the period in which the employee is given the services, accordingly the expenditures are also to be booked. If it is for 5 years, divide it by 5 years. Is it so simple? No. We know time has a money. Time has a money? No. Time is more valuable than money because there is a time value of money. That means today if I told you, you need to pay me 5 lakhs. So you told me, ma'am, I don't have money. Let me pay you after 1 year. Okay, done. I'm giving you 1 year. After 1 year you came and gave me 5 lakhs. Will I accept? Ma'am, where is interest? Why there is an interest? Because time has a money. That means there is a time value of money of concepts. So time value is very important. Over here also, if you are going to make a payment after 5 years, so you have to bring everything to the present value and accordingly we are supposed to book. So that is something which we have learned in IAS 19 also. If I go further, again an important concept talks about income taxes, accounting for taxes. Hey, what it is accounting for taxes? Accounting for taxes, that is IAS 12, which talks about if you are paying income taxes, if you are paying income taxes in whatever country you all are having, so if you are paying them, hey, are you paying as per the books profit? No. As per books of accounts, like we can consider the normal BCom students or the graduate one. The normal graduate one prepares the financial statements, and we as an ACCA or the people who are well aware of what the taxes are, we know whatever income they show and whatever income I show will be different. Maybe because of the depreciation rates are changed, or like I am not allowed as a taxes purpose, we are disallowing these things, etc. But we are paying the taxes on the income tax profit. So basically the accounting profit and the income tax profit are not the same. If they are not the same, that means, ma'am, there will be a conflict between them. Yes. That is nothing other than the temporary differences. So basically it is a timing differences which are bifurcated into permanent difference and temporary difference. So if there is any temporary difference, then what are we supposed to do? We are supposed to book a deferred tax. It could be either a deferred tax asset or a deferred tax liability. That is something which we have learned in IAS 12. So yeah, these are all the course content, okay? And further, we know because there are provisions, I think, yeah, the company is liable to pay. There is a court case going on, okay? There is a court case going on. And the company feels that, ma'am, I went to the lawyer, I told, see now on my company there is a court case. My lawyer told, Ashwini ma'am, see, 90% there is a chance that you have to pay. Oh shit, seriously? Yes. If my probability is more than 50% chance that I will be having to pay, I will be having an obligation to complete that, then it is compulsory for me to show in my financial statements. So this could be my provision, okay. But then my lawyer told, like for example, I'm just repeating another example. My lawyer told, ma'am, it is just 20% chance, ma'am, you need not pay it. Let it be, ma'am, will not show. Okay, good now. Let's not show in the financial positions. But this I cannot rely from showing in the notes to accounts. So it's very compulsory for me to show in the notes to account also. Why? At least my users should know now. At least my users should know. What they should know? On the company there is a court case which is going on. So it's more of important for me to present the contingent liability. Similarly, it goes with the contingent asset also. So that is something which we have learned in IAS 37. Further, if I go, there are certain events which are occurring after the reporting period. Okay, so my year ends and I am going to occur some events maybe after the reporting period ends. But we know once my year is over, once my financial year is over, are my financial statements approved at that period only? No, ma'am, for approval the auditor has to come, auditor has to verify. It takes a good time. And in case after my reporting period is over and the financial statements are approved, if there is a time in between and if there are any consequences happening, like if there is an event happening which is giving me further evidences, then that are known as adjusting events, and some could be non-adjusting events. So that is something which we have learned in the events occurring after the reporting period. So even that are to be taken care of. If I go further, the most important concept is fair value measurement. Hey, what is that? Normally, whatever asset, suppose I am having an asset today, and if I feel I sell in the market, what amount will I get? Okay, I don't want to sell in the market. I want to see what is the market situation. Or else if I am having a liability and if I want to pay the liability today itself, what is the price that you are going to pay or settle? So that is nothing other than the fair value concepts. So every line item of my financial statements are obliged to be shown at a fair value until unless any standard gives the exemption, as it is given in investment property, right? You can show at a cost or fair value, whichever you feel more relevant it is. Then we have a concept of IFRS 2, which talks about share-based payments. For example, if I am having an employee, okay, so basically my company, there are many employees, and I told my employees, if you work in my condition, if you work in my company with some vesting conditions, like if you work in my company, you have to work for minimum 5 years. If you work for 5 years, I'll be giving you my company's shares. Okay, means if I want to take any goods, if I want to take any assets or services, but in return I don't want to pay them cash, but if I want to settle it into equity, or I want to settle into cash but whose value is derived from the equity shares, that is nothing other than the share based payments. Even this is relevant. Okay, this is relevant. Then when it is IFRS, I know you will be dealing the standards, you will be dealing with the transactions not just within the country. If you're dealing with some foreign country, don't you think the exchange rate comes into picture? Yeah, because there is an exchange rate, there is obviously a difference of exchange also. So yeah, when there is exchange difference, where am I going to account it? That is to be routed as per International Accounting Standard 21, which tells us the foreign exchange changes and the effects of the foreign exchange. So after completing that, we know that if like I am the investor, what will I be more of interested into? Oh, just tell me now. In the current year, I had a profit. Okay, just give me a minute. Suppose, yeah, in the current year, yeah, let's say this is my current year, and I know when I am preparing any financial statements, I don't prepare just for 1 year. I do normally prepare for the current year and for the previous year. Yeah. Say for example, this is my current year. Let's take 2022, that is from 1st Jan till 31st December. And this is 2021. Okay. Yeah. In the current year, let's take my profits are 10 lakhs. Yeah. Cool. And the previous year, it was 15 lakhs. Hey. So what you will think, which is better, which is the year, which year is more better? Yeah, what you will feel, which year is more better? Yeah, everybody told previous year, ma'am. Yeah, previous year is more better. Yeah, cool. Do you really think only by taking this much decisions are we good to say, this is better? Seriously? I'll tell you no. Because, ma'am, there could be a situation that the turnover, ma'am, you check the turnover first of all. Okay. Because we know that in the market today, when we are taking any decisions, we are taking it on the analysis. That is something which is again the most important concept, which talks about ratio analysis and its interpretation. See guys, if you would have given FR, I am sure that ratios will be of every chapter, because it's just that learn the formulas, apply the figures, all done. That is easy again, right? But when I talk about SBR, it is like not at all concerned. Like, it is important, but they are not giving any emphasis or markings more on the calculation. Like, why? See, for example, I told you over here the sales, because in this year now you will tell, ma'am, in this year now there was a COVID effect again. It is not, but still, if there was a COVID effect again, because of which my turnover dropped a lot. Okay, so ma'am, what was your turnover? You will tell, acha ma'am, my turnover was 50 lakhs. But in the previous year, that is in 2021, I was having a superb turnover of 2 CR. Seriously? Yeah. Oh my god. Then what do you think which is better? Which year is better? Then we have to find out the formula, that is the profit ratio, that is net profit ratio, that is profit upon sales into 100. So I am getting it over here some 7.5%. If I copy and paste it over here, I'll be getting 20% profit. Yeah, that is over here. It is 20% profit and it is just 7.5% profit. So just by checking the profits, we will not be able to take any decision. So yeah, this is not better. This current period is better. Okay. So you'll be telling, ma'am, this was very easy, na? Everyone can know this. Yeah, we can just apply the formula, we can know this. But what is relevant over here is, we are not going to tell them, okay, oh, in the current year it's better, yeah, in the previous year it was not. We are supposed to interpret them. Yeah, because of the less sales, then we have to write. Maybe there could be a situation that the because of COVID and whatever it is, so analysis, whatever we have to write, that is suppose, or we can write, because there could be situation in the previous year my product had a huge demand because it was newly introduced in the market. Because of the reducing demand, my sales turnover has reduced, or because why the profits are more, because I have incurred less cost, because I have purchased a lot things in the bulk, I would have got the discount. So all these things are also to be interpreted. So that is something which is again important in ratio analysis and interpretation. In that too, about the yield and about the ROCE, that is the return on capital employed. So yeah, that are again very important. And when I come to the end of the topic, we are at the top notch place where we have to understand consolidation. So what is consolidation? So that is the core area where we are going to take care of, and that is something in the revision we are going to cover, something about consolidation. And some current issues also. So what was current issues? Cryptocurrency and all. Okay, that was very easy again. So before going ahead, let us again go to the PPT and see what is the revision plan. What's the revision plan? So I told you, we are going to understand what? We are going to understand the consolidation. What is consolidation? Need not worry, we are having a very good pace. So yeah, we can do that. So consolidation of financial group statements. We are going to understand one case study. What case study? Is it just one case study? See, up till today now, they have not ever tested. Before what they were doing it, they were framing some theory is in the case study, and then they were asking us the questions like, okay, calculate goodwill, calculate NCI and all. So we were supposed doing that, but now the pattern has been changed. And it's just one paper, one question in the specimens, like whatever is being analyzed. You might be aware of ACCA study hub and all, yeah. Yeah, don't worry, we are going to see that too. Okay, so we are going to analyze what question came in the paper, that is in the specimen, because from now the things are going to change. So what things are going to change? Now for us, now things are going to be easy, where I know we must be very much good at doing the calculation parts. So now they are going to implement 10 to 14 marks one question pattern which is going to be changed. So before, as told you, theory was being tested. Now they will be giving in the question the pre-populated spreadsheet. Means when we were small, we were preparing the trial balance, the wrong figures were given. Acha, this asset wrong figure, this liability wrong figure. We are going to act as an auditor. We are going to correct the misstatement figures. That's all. And yeah, that is something. Only one question came in the specimen, so we'll be taking that. And I have collected it some questions from sources also. So yeah, we are going to solve that questions, which makes our knowledge more easier. Okay, then we'll be doing like 50, like the four questions. 4 questions we'll be doing from 15 to 40 marks case study. What is case studies? Yeah, if you would have like once also gone through the papers, you will be knowing that all the different case studies are coming. All the different case studies, testing the different standards are going to be there. So 4 of them we are going to do, and obviously 2 sample papers we are going to solve. That is the mock papers we are going to solve. Okay. Now, what is the paper pattern? Yeah, if I think you would have gone with the paper series, so you'll be knowing. But then there are basically 4 questions. Marks are 100. Yeah. So if I just normally take into care, so 100 mark papers, only 4 questions. So what are we going to do? We are going to make a calculation. Along with the calculations, we are going to interpret the things also. So yeah, we have to analyze the thing, solve the calculations also. What is the time duration for exam? That is 3 hours and 15 minutes. Students, I hope you guys are knowing that. If I am getting the paper, is it on a piece of paper? No. It is a computer based exam where we are supposed to have a thorough knowledge of how are we going to write and frame the answers. Yeah, so in the Excels or in the Word format. Okay, in the Excel or in the Word format. See, when I draft about the theories, so theories are shown in the Word format. But when we are having a different question, that is pre-populated spreadsheet. So that spreadsheet, the answers are to be given where? So that is to be written where? That is to be shown in the Excel. So yeah, we should be having the knowledge, as it is a computer based examination. So that can be like at your place, at your remote place, at your home. Also you can write the paper, or else if you wish, there are many centers also. So you can go in the centers and attend your papers. So there are 4 questions, as I told you, which is being tested. Okay. So what are those 4 questions? Paper pattern of SBR. So paper pattern consists of 3 hours and 15 minutes. Then basically it is bifurcated into 2 sections. Section A and Section B. Section A and Section B. Okay. So what is Section A basically consisting of? If I go further, my Section A will be having 2 scenario based questions. So basically there are big questions, and in that now there are exhibits given. So okay, they'll form one full case scenario. Inside that they'll be writing, okay, this is an exhibit. Means if you want to answer the first answer, so that also there are different points. If you want to answer first part, you have to find out what are the adjusting entries or exhibits. In that also, the first case scenario, like there are 2 scenarios. The first scenarios will be bifurcated into 30 marks, which will show us 10 to 15 marks will be like 10 to 14, it is approximated, with the financial statements of the consolidation. Okay. And what will be the remaining, ma'am? So remaining they can be tested, like they can test it from other standards. Okay. If I talk about case 2, so basically the case 2 is tested on the ethical part. So what is ethical part? As I told you, it is our responsibility as an accountant to formalize or to frame the statements. That is very perfect. Right? The financial statements should be on the base where the people can have the trust. So even the ACCA has made us some rules where we are supposed to show it at this pace. And if I am not satisfying the criteria, then the ethics are going to take well. Yeah. So I'll be penalized with some ethical parts. So basically the first case scenario, just give me a minute. Yeah. So basically the first case scenario over here will be based on the financial statements of the group entity, which is the most important, consolidation. That is something which we're going to learn. And the second case scenario talks about the ethical part. Okay, what is in section B? Section B, there will be two case scenarios. Yeah, normal scenarios of 25 marks and 25 marks each. And in this 25 marks also now, they'll be giving an emphasis on the ratios, interpretation, and some normal standards. See, they don't have a proper like standardized examination. Oh no, this will be coming in this only. But then the first question, normally they talks about the consolidation part. And then in the case 2 scenario, they'll be testing about the ethics. And for section B, they'll be testing about the ratios and whatever the remaining questions they want to test from the relevant standards. So yeah, this is the paper pattern or the paper duration, that is 3 hours and 15 minutes. And yeah, we need to be very quick because the paper, like I'll tell you one true thing. If I'm very intelligent now, only then my paper is going to leave, because I'll be updated and I'll be writing. And again, it is not a paper pen. So we need to be fast in typing. See, spelling mistakes and all are not so important, but the concepts to be written are very important, right? Okay, yeah. So I know people will be like very much like people would have heard there is a change in SBR, but I'll tell you, need not go and find out other books, need not go and check out other authors, need not revise your books. No. Whatever knowledge you are possessing, it's just that the pattern of asking the question has changed. The concepts have not changed, the concepts haven't changed, but the pattern has been changed. So how it is, the way of asking the question has been changed. Like the first question, as I told you before, there was more of theory, like mixed concepts of, okay, calculate for goodwill, calculate for NCI. But now they have given us a very good option. They have drafted a financial statements, wrong statements. Okay, that is, they have drafted a pre-populated spreadsheet where we as an auditor and the future chartered accountants are going to rectify our financial statements. We'll see, this asset now it's mistaken, correct it. Okay, so we are going to change the figures, that's all. What are they going to test in the first and the foremost question? It can be consolidated financial statements, it could be associates. What's associate? That is also something which we're going to learn. Then some cash flow statements. This is more of real life. Like before it was less in SBR, the interpretation and all was tested, but now we have to find out what are the misleading concepts. So as I told you, they'll be testing for 10 to 14 marks in the spreadsheet, checking the knowledge and not changing the syllabus. Okay, not changing the syllabus. As I told you, the students have to draft the consolidated P&L account, financial statements, consolidated cash flow. And what could be the mistakes? They could make a mistakes now. They can make a mistakes in the formulation of the subsidiaries acquisition mistake. There could be certain accounting errors. Yeah, there could be certain other policies errors. So yeah, errors they can make. Alternatively, we have to correct them. We have to understand what is the recognition criteria, and then we are supposed to make the changes. So we are going to learn, as I told you, the most important and the core concept of consolidation, which is again an important concept and the first and the foremost question to be tested in the first paper. And the changes in the course content, as we understood that the financial figures as such are not so much of change over here also. We are just going to make the changes. We have to make the changes in the pre-populated spreadsheet. But when I talk about IFRS 15, which is revenue, so in revenue now, they have made certain changes. That is, the contract modification has been come into picture. What is contract modification? Means there could be one additional contract. Okay, like in the contract, there could be one additional contract that you have to do this also. Okay, so am I supposed to add it in the existing contract, or am I supposed to make altogether a new contract? So that is a change which just came into picture. So are we supposed to make a separate contract, or can I change in the existing contract? That is to be learnt. Then we have a change and a new additional concept of repurchase agreement. That means, what is repurchase? Something you're going to sell, something you're going to make a sale. Okay, if I'm making a sale, I'll be earning a revenue, isn't it? So if I'm making a sale, I'm earning a revenue. Then what is repurchase? Once I have made a sale, then again I want it back. That is a repurchase. Hey, why this thing will happen? Just imagine now. If you are in the need of money, so you're forced to make a sale. You made a sale, okay, you made a sale also. And then what happened? You made a sale, you got the money today, but actually you were in the need of the asset. So what you'll do? It's not a sale and lease back. No. After you make a sale, like whenever you arrange for the finance and then you again go with that person and again buy that asset, that is a repurchase. So at what price I'm supposed to do? It's something like financing arrangement. It's to be taken care of, and some operating concepts, leases concepts are also inbuilt in that. So that is something which is changed. Then as told you, IFRS 9, which is the financial instruments, which is again very important. In that now more specifications have been came into picture for the business model. So yeah, what is my contractual cash flows? Is it something which I have to book as per the like amortized cost method, fair value through OCI method, other comprehensive income, or I have to measure through P&L account? So that has been taken care of. Some irrelevant concepts, yeah, which was relevant before, but now they have removed. A very big thanks to the institute, right? They have removed embedded derivatives. Seriously, yes, they have removed the embedded derivatives. Along with that, they have also removed the concept of interim financial reporting, that is IS 34. So which was talking about that if I want to see my financial statements, should I wait for whole 1 year? So they told no. If you want, you can make some months also financial statements. So that is interim financial statements. So they have removed that concept. Now they are going to emphasize more on which value, on this standard, which is IS 1, that is preparation and presentation of financial statements. Because now they are more of interested into knowing, like whatever discrete information you are presenting, it should be at a relevant state. Okay, so they'll be emphasizing on that. And when I talk about cash flow statements initially was one full-fledged question which used to come, which they normally present it in the operating activities. It could be investing activities, it could be financing activities. But now they have changed the way from scratch. They are going to add it. If they want to test, they'll be testing in the pre-populated spreadsheet only. That is, I told you, 10 to 14 marks question. So they'll maybe including in that only. So maybe that could be tested. Then, if you know the last concept of current issues. So yeah, before people used to think, yeah, these are some current affairs, but it is not an actual current affairs. The name has been now changed into discussion in the issue in the financial reporting. Like if I'm having a cryptocurrency, so on what value should I measure the cryptocurrency? Okay, if I'm having some natural disasters occurred because of the natural disasters in my company, there are certain losses, then which standard are we going to apply? So all these things are also to be learned in that. Okay, further, if I'm introducing to SBR, let us why not introduce ourselves to ACCA exam supports. See, sir, ma'am, students, this is all it is. That means nothing is going to come beyond this, because it is giving the best knowledge and the practical support also, which tells us about the exam support, some technical articles, how am I going to present in the CBE platform, practice papers, real exam experiences, practice questions, and how are we going to mark our answers. Let us go ahead and learn about what is ACCA Study Hub and CBE platform. See, I think you guys are the students of ACCA registered, right? If you guys are registered in ACCA, so obviously wait, I'll now show you in the tab, so how we are going to go with that. See, students, if you all are registered in ACCA, definitely you will be having some IGN password. So I am a chartered accountant and I am not the student of ACCA, so I am using my student ID and just want to show you. Okay, let me show you. What am I supposed to write over here is CBE practice. Okay, CBE platform ACCA login, where I am supposed to log in the past exam and question practices. the 2 exam support resources, that is ACCA Global. Okay, if I open that, I'll be featured with many aspects. Over here I have to log in into the practice platform, where I can figure out acha, how many exams were there, yeah, how many past papers are there, what is my specimen paper. Yeah, I'm just using it, my student's login ID, so that yeah, I just logged in into. Okay, so this is where my portal is going to look like. So yeah, what is this? Home. Okay, see, whatever paper we are getting, for example, if it is a catalog, over here some subjects. If I talk about SBR, strategic business reporting, if I click on that, I'll be getting so much blank workspace, international, island, but we know we are going to give UK. So UK, and then the official resources is to be typed. In that, if you can check out, we are getting over here the knowledge of past exam libraries, okay, where we can get the past papers. We are having a practice exams also, so yeah, and then the specimen paper. I told you we have going to cover some 2 papers also, so that is also to be covered, and 1 consolidated question was tested in specimen. Okay, if I show you the practice exam, which I think we all should practice, like before going in the hand and writing the exam paper, why not to practice? If I practice it, I need to suppose assign the paper to myself. If I have assigned the paper SBR UK practice exam 1, so over here UK exam 1 passed, suppose. So let me start the paper. So how it is going to look, that is something which we know. Okay, so all these things we need to read it and go on to the next. Again they have given we are supposed to read each and everything. What are the differences, some general instructions, there are certain exhibits which we need to learn, which we have to read it, then give the answers. Cool. What's next? If I go on to the next, oh yeah, it's not allowing me to go, maybe because I have chosen this. Yeah, okay, I will just show it. Okay, yeah, if it is visible now, yeah, okay. Yeah, I just want to leave it and log in again, because it was not allowing me to go further, because I have marked that thing now. So that was not allowed for me to mark, but then no worries. SBR paper practice, wait a minute, where it is. Yeah, we have completed this. Okay, let's resume again. We'll just see. So section A, as I told you, 2 questions, 50 marks. So yes, we'll go further. See, this is a question. See, if I read this question, it will be shown. Then they have asked some exhibits. Like if I read the question first, then I have to go with the first thing. Over here, the first question was the acquisition of grape company. Okay, so in the grape company, I have to find out what is the exhibit. So about grape company, they will be giving all the questions. So yeah, this is something about grape company. So what happened with the grape company? What are we supposed to answer? Everything is to be learnt. Everything is to be read. Same goes with the second, third, fourth, fifth. And then they'll ask us to make the requirement. So what are the tests? What are the questions they have tested? So yeah, these are the questions which we are supposed to answer. So yes, like that, so we have to write, and then spreadsheet for what I want to answer, suppose. Okay, so I told you now, students, the first question has been changed. So now they are going to have these format. So they will be giving us the balance sheet, some assets, liabilities and everything. Question will be framed. Okay, where according to them the total assets and the total liabilities will be matching. Okay, yeah, and that is obviously they are going to match only now. But I know if they have given us a question, definitely there is something which is misstated. So then we have to find out, and then we have to make the responses. After responding, we need to go to next. Then the second question, similarly, after completing 2 questions, we'll be arrived at a section B, where again there are 2 questions for 25 marks each. So if I go forward, I'll be having a question, again the same. See, this is for practice. Why am I showing you this? Because next if I do, like if I would have attempted, I would have written something, I would have got attempted. You need to write, you need to practice in the paper, you need to practice. then you will be get the attempted papers, you'll be getting the answer. And if you want to check yourself whether you have attempted the questions in a right phase or wrong, end the examination here, end the examination, yes, end the exam, and then what I'm going to do, exit and show here mark. What is mark? If I go to the mark, I can check whatever answers I have written along with the answers which are actually a specimen answers what they have provided. For example, over here SBR paper, self mark, I'll write it over here, self mark, what marks I got, but actually I have not written anything, isn't it? So I'll not be able to see what answers I have written. Yeah. So my roll up score is 0. Oh, that's very bad because I have not attempted anything. So yeah, this is the question. If I want to see questions, I can hide, I can show. So yeah, these are the questions, this is the exhibit. Yes, I have not given anything, so I'll not be having any answer. But over here now, sir, ma'am, we can check here the answer, sample answer. If I click here, this is my answer. This is my answer. If I make it automatically a big zoom like 150, so you can check out. This is the answer what they have provided. So yes, this is the way I am supposed to write the answer, and this is what I told you. We have to make changes in the books. So yeah, this is the way. This is my misstated figures, this is my corrected figures. So there was 326, now it becomes 344. How? Then the liability is also same way, it goes on. So yeah, so everything we have to correct it. We have to write here, Achha, this is the correct treatment what we are supposed to do, what is the wrong treatment, everything we have to write it. Okay, so then it will be answer 2. Yeah, even answer for answer 2 also we have to find it out the same way. So yeah, for answer 2, this is my answer. Check the answer. Yeah. So similarly, things are going to go. I hope this is also fine. So students, it's better for us to practice this kind of papers. Huh? It's better to practice. Okay. So practicing will make the things at our hand. Okay. Now, this is the CBE platform. So I think there is no doubt in CBE platform. Even we do have ACCA. There is my ACCA.acccaglobal.com. Okay, that is my ACCAglobal.com, where we are going to have some qualifications. Yeah. So in that too. Okay, yeah, so I'll tell them in that also, in that platform also we can find out what are the notes, what are the books, and similarly. Okay, yeah, so that is cool. I think even that is fine. Now again we can go with the slide. So yeah, these are some real exams platform where we can show the things. So yeah, this was all about the first plan of the starting scenario, where we have learned about the changes, like what the paper pattern is, what is the course content, and how we are going to go ahead. So basically we are going to cover the first concept of consolidation, then some questions, paper pattern, and then at the second time we are going to learn some 4 questions of section B also. That means some like 15 marker, 20 marker, 25 markers, and then finally 2 exam papers are to be done. So yeah, let's go ahead. So let us take a break of 5 minutes and then we'll be starting with the consolidation. So yes, let's begin again. Yeah, after a short break. Yeah, so now this was the first concept that we learned. Okay, now we are supposed to learn one more concept which I told you, which is again very important. Yeah, which is again very important. That is, just give me a minute. Yeah, with this we are going to start the very important concept which is about consolidation. So yeah, what is the meaning of consolidation? And like everybody would have heard in the word, like if it is financial reporting or SBR, consolidation is very important. So what is consolidation and how am I going to understand the different situations? How am I going to account for the consolidation of group of accounts? So before going into the details of the word of consolidation, let us understand the group accounts. So what constitutes a group? What constitutes a group? If I normally talk about, if there is one entity, let me open an Excel for you all so that we can yeah, I think it's visible. The visibility is fine, yeah, or else I'll just make it more bigger. Yeah. So when I talk about consolidated financial statements over here, we are going to understand basically 5 standards. See, when I talk about CFS, it has been bifurcated into IAS 27, which talks about separate financial statements, which is again very common. Very common means normally what the people have to do, the people have to formulate the financial statements, and that is to be made as per the IAS 27. That is SFS, separate financial statements. Then that though we have normal standards, and according to that we are normally booking our financial statements, that would be very easy again. But then what is IFRS? See, in this consolidated financial statements, the most important standard is IFRS 10, which talks about CFS with subsidiary. Okay, you will be understanding like what is subsidiary. Okay, let's understand that too. Then IFRS 11 talks about joint arrangement. What's joint arrangement? Okay. Then we do have IAS 28, International Accounting Standard 28, which talks about investments in associates and joint ventures. Then we do have IFRS 3, which is business combination. If I just talk about these words, which is the standard which we have learned like 10 minutes ago? That was IFRS 3. I normally talked about IFRS 3. That was business combination. Before I go ahead, let us easily understand one concept. Okay. Before going into the consolidation, the relationships are very important. What is relationship? And whose relationship are we talking about? So we are supposed to understand. So basically there could be parties or there could be companies. We have to understand, oh, is there any relationship between that party or not? So the first thing, let us write ABC company, that is AB company. It's Ashwini Bhanushal. I always make it AB company. So yeah, AB company. Suppose I am having like a lot of money. So what I thought of, let me invest 100% in somebody else's company. For example, AB company would want to make an investment. So I made an investment in preference shares. That to 100% preference shares I have invested in XYZ company. Okay, can you tell me if I have made an investment in 100% preference shares? I want yes or no. If I have made 100% investment in preference share, will that company be my related party? I just want to make it more zoom. Yeah. ABC company, if suppose ABC company has made an investment in preference share 100% in XYZ, will there be any relationship between ABC company, AB company and XYZ company? So you'll be telling yes ma'am, AB company will be the holding company. So I'll tell you a big no. Why a big no? There will be no relationship. It's just that AB company has to write in its financial statement investments and so and so. Why? Because we do. If I want to be the owner of some company, I should be not a preference shareholder, but I should be an equity holder. Yeah, cool. Say for example, AB company, yeah, I'm the company, yeah, like I write like this only. AB company, suppose I have made 100% investments in equity share. Oh yeah, if I have made 100% equity shares investment in XYZ company, what will I be known as? Oh yeah, that means in XYZ company, if there are 1000 shares, all 1000 shares have been taken by me. So I will be the owner of that company. So what I will be known as? So basically, I'll be known as a parent company. Or I can say holding company. So I'll be known as a parent company, or I can be known as a holding company, which is having a stake on XYZ company. Okay. So what is XYZ company known as? Yeah, I think everybody would have told it subsidiary. So I'll tell it, yes, it is a wholly owned subsidiary. Okay, wholly owned subsidiary. Yeah. Let me go further. For example, I'm just copying the thing now, but things are being different. Like if I have made an investment of not 100%, let's take 90%. If it is 90%, then will that be my wholly owned subsidiary? Can I control that company? Can I manage the decisions? Can I take the financial decisions? Can I make the operational decisions of that company? If yes, means if you are having the control over another company. When I go into the word of consolidation, we are going to understand one thing which is very important. At the time of having a consolidation, or when the time of making a consolidation, when I want to know the relationship between the parent and the subsidiary, the important linkage which chooses is the control. So basically it should have a control. So if I talk about the control, oh yeah, ma'am, it is a parent and subsidiary. Yeah, I feel it is a parent and subsidiary. Why? Because ma'am, 90% stake you are having, it's 10% somebody else. Okay, 90% if you are having, you will be also known as parent company. I'll be known as parent company, and that other party will be known as not wholly owned subsidiary, but it will be my normal subsidiary. So I normally consider it as a subsidiary. Yeah, if I normally consider it as a subsidiary, and if I am having 90% stake, can you tell me who will be the 10%? Who will be having the 10% stake? Yeah, 10% also there will be a stake, isn't it? Like if I do have only 90%, there will be some party who will be having 10% stake. What about them? The 10% stake, the one who is holding 10% stake, it could be one party also. It could be like a lot of people who are having like 0.5%, 0.1%, it's something like that, a stake. So they will be known as NCI. It is NCI. That is non-controlling, basically non-controlling interest. So they will be having a non-controlling interest. Hey, what is the meaning of non-controlling? Like, I don't know, people would have heard NCI word, or some people would have heard MI, that is minority interest. But in the IFRS, the MI has been not considering, they are considering NCI, that is non-controlling interest. That means, if I am the parent, so all the ultimate decisions are taken by me and not by the NCI. So when I want to determine a relationship between parent and subsidiary, the important term is a control. So how is the control now came into picture? How do I get the control? If I normally figure out the control, people will think, you know what, ma'am, if you have more than 51% voting power, you are having a control. Okay. So on a normal language, it is like, okay, if I am having more than 51% power, so I'll be the one who is actually having a control. Only is these satisfying the definition of control? So I'll go, no, we need to be more further than that. That means, say for example, if I am I'm talking about for the Reliance industry, maybe you might be knowing, if it is Reliance industry, and say for example, Mukesh Ambani do not have a single person voting power. So he has not taken any shares of the company. No, zero. But the ultimate decision, ultimate power of the decisions, and the right, the ability to direct the control, everything is in the hands of that KMP. If everything is in the hand of KMP, even that will be known as a parent. So today now, just more than 51% is not limited. So it is not enough. It's not enough to term it as, okay, if I am having more than 51%, only then I will be parent. No. Instead of having more than 51%, also somebody else could be parent. See, that is all not going to be tested in the paper, but we should be knowing the meaning of control. So if I go further and talk about control, it is just that you need to have a control and the ability to take the financial and the operating decisions. Along with that, the company should have a right of variable returns. What is variable returns? Like for example, in future, if the company earns well, I'll get more dividends. So yeah, it could be like, okay. So that is basically the parent company and the subsidiary. Yeah. So it is a control. For example, if I go further, I'll tell you that suppose AB company over here is having, like I have purchased only, like let's say 25%, like I have made a 25% investment, yeah, in XYZ company. Along with that now, I don't have any control also. Right? ABC company have just made 25% investments. With 25%, can I control that company? No, ma'am. How? Just 25%. There will be other party who will be having more than 75%. Or there could be a scenario where there could be 2-3 parties who are holding. So at that time now, it is very much important to know if I am having any investment, which is greater than 20%, restricted to or less than 50%, then okay. If I'm having more than 20% but restricted to 50% in some company, like I have made an investment, then that company will be known as my associate company. Okay, so that will be known as my associate company. So that is again not a subsidiary. So we have understood by now parent company, subsidiary, wholly owned subsidiary, and over here we understood as what is associate, where I can make an investment of more than 20%, but yeah ma'am, less than 50% that should be there. So that is my associate. Cool. So that is my associate. Yeah. Now if that is my associate, can I show it? Can I consolidate it? Can I add it? So for that now, one more thing is important to know. If that is my associate, to term it as an associate, AB company should have a significant influence. So AB company should possess significant influence. Okay, what is significant influence, by the way? Yeah. What is significant influence? That means my decisions should also influence them. For example, yeah, ABC company, let us AB. There is somebody like DE, let's write D, and basically there is some E. Okay, so basically these are some 3 shareholders, A, B, D and E. I am having 25% control. Cool. D is having over that company only, on XYZ company only. Suppose D is having a control of, let's say, 45%. Yeah. And what's left over here? 30. Okay, chalo, 30% is there with E. Okay. Do you think I will be having any authority to take any decisions just by having 25%? And in the memorandum of association, it is written that any decisions you are taking should form a part of majority. Like majority's decision is valid. Now, do you think AB can, just by having a 25% stake, will work as a power to take the decisions? So for that now, we need to analyze. Say for example, D Limited over here, the D party has said yes to some decision. Yeah, so there was a conflict going on. So they told, we want to purchase from this party. Okay, so D told yes, agreed. E told no, we cannot agree. Then do you think AB Limited with the 25% right has the power to influence the decision? Yeah, I'll have the power to influence the decision. I'll have the power to participate in the decision. For example, I'll be having a participation power and the decision making power. For example, if I agreed, if I said yes, then AB and D will form the majority and take the decision. And if AB, I told no, then 25 plus 30 will also form the majority and I can now participate to take the decision. But yeah, if there was a scenario, let's say for example, if D also said yes, E also said yes, then though I don't have a significant influence. It's just that it is an associate for me. Like, yeah, okay, I'll record it as an associate. Cool. So if a party is having more than 20% but restricted to 50%, right? So that is understood as an associate. Okay, so that is something which we are going to account it as per IAS 28 over here. Investment in associates and joint ventures. So then what is joint ventures? What is joint ventures? JVs normally we consider it as joint ventures. Say for example, if you and me, we have came together, okay, if over here, if A and there is some another company that is let's say A Limited and Z Limited, we have came together, A Limited and Z Limited, we have came together. I told and we discuss, acha, for this much project now we have to cope up this thing. So basically for some project, A Limited is also having a share of like 50%, cool. Even Z Limited is having some 50% stake, yeah. So we both have a control of 50%. And then what we did, A and Z, we entered into a transaction. And in the legal form, we created a company. We created AZ Limited. Hey, what is this AZ Limited? It is understood as a separate vehicle. That means if we want to understand joint ventures now, like both the parties should come together, they should create a separate legal entity in which A is also going to contribute something, Z is also going to contribute something. If I am contributing assets, it will not be my asset. No, it will be the company's asset. So basically A will be different, Z will be different, and the entity will be different. If we enter like this, okay, so that is joint venture. If I am having an interest and I have interested into like 50% and the other party has also introduced 50%, then to take the decision, do you think individually can someone take the decision? So it's not possible. To form the majority, unanimous decision is relevant. Why? I alone cannot take the decision. Neither Z alone can take the decision. So now a unanimous decision of 50% which combines and becomes 100% is very important. So when I enter into an agreement with 50%, that is nothing other than joint venture. I hope you understood JV also. Yeah. So by now we have covered the first relationship between parent and subsidiary, parent and wholly owned subsidiary. Okay. Then we have understood a concept of over here the associate. If it is more than 20 but less than 50, it is an associate. Okay. Then we understood something about JVs, that is joint ventures, if it is 50%. So now we need to understand one more thing. Hey, at the time of if I am purchasing something, right? If I am purchasing something, okay, so what should I have? If I am purchasing something, I should have the control over that company, yeah? So if I am having a control, that will become a parent and subsidiary relationship. Before going to that, suppose over here 50%, let's take A Limited, like me. If I have made an investment at the rate of 15% only in XYZ company, oh yeah, just imagine now by 15%, will I be the parent company? Ma'am, no. Ma'am, if you don't have control, no. Will I be an associate? Like for me, will that company be an associate? No, for that it should be more than 20. Over here it's just 15. Is it more than 50? No, so joint venture also won't be there. Then what is just 15% known as? If I figure out just 15% is nothing other than the normal investments. So it's a normal equity investments. Yeah, if I'm talking about the normal equity investments, can you tell me which standard hits there? Yeah. So over here, see, if it is subsidiary, IFRS 10 comes into picture. Cool. If it is associates and JV, IAS 28 comes into picture. So if I'm having a normal investment, which standard, according to which standard are we going to book? See, we need to keep this thing very highly in mind, that IFRS 9, which you remember was about financial instruments. What is financial instruments? What's financial instruments? For example, if I feel at the financial instruments, if I feel just 15%, so we are having three options. If it is a debt, whether my company would want to hold that instrument for a long period, then the amortized cost method follows. But if I feel my company is just interested in getting interest and principal, and in between, if I feel till maturity I can sell, then the changes are booked through fair value other comprehensive income, FVTOCI. But for example, if you have made an investment just for the trading purpose, and if there is any change in the carrying amount and the fair value, it should be directly routed through profit and loss account. So yes, so normally for the instruments we have like if it is IFRS 9, we do have some 3 standards, like we have to show amortized cost, FET OCI and FET PL. But when I talk about equity investments, like if I am invested into equity, so when it is contractual cash flows, do you think in the equity investments will I be getting all time interest? No, interest so I don't get. Ma'am, will I be getting all time dividend? Even that is at the discretion option of the company. If the company would want, they'll give, otherwise they'll not give. Cool. Yeah, so every time it is not compulsory. So amortized cost is also not followed. Then the P&L account is always open. P&L account told, like if there is any change in the value, you book through P&L account. But I'll tell them, see, I am not interested into selling and trading. I am not at all into the trading business. Then why are you telling me to book in P&L account? Then we have the last option of fair value through other comprehensive income, where I am suppose I have made an investment at the carrying amount of 5 lakhs. And at the year end, the market value has reached to 6 lakhs. So there is an increase of 1 lakh. So 1 lakh is not my P&L gain, it is an other comprehensive income gain. So this is my normal investments. So I hope the normal investment is also easy. Now, like just for a random question only I am taking, which is again okay, fine. We have to consider what, say for example, H Limited. This is H Limited means the holding company. If the holding company, if the H Limited has made an investment in A Limited, if I have made an investment in A Limited and H Limited has made an investment in B Limited also. For example, H Limited has made, this is what I'm always liking to do. Yeah, just give me a minute. Yeah, if you can see this. If H Limited over here, if H Limited has made investments in A Limited also, B Limited also, and you know what, H Limited has made an investment of 80%. Oh, how much? 80%. H Limited has made 80% investment in A Limited, and H Limited has made 100% investment in B Limited. So for holding company, for H Limited, A Limited will be known as what? A Limited will be known as subsidiary. But for H Limited, B will be known as wholly owned subsidiary. Cool. Wholly owned subsidiary. Even that is fine. That is something which you obviously know. So, can you tell me what will be the relationship of H with A and B? Or will there be any relationship? I'll tell you. For H Limited, now H Limited will be known as a parent company. H Limited will be known as a parent company, and it is the responsibility of the parent company to prepare its financial statements. So yeah, suppose H Limited is going to make its financial statements, A Limited is going to make its financial statements, B Limited is also going to make its financial statements. Then what is consolidation? Everybody is going to prepare its own standalone financial statements. SFS, FSF, SFS. Everybody is going to prepare SFS. Then who is going to prepare CFS? It is always the parent company who has to combine its financials and attach subsidiaries' financial statements also. So H Limited has to combine A Limited's financials also, B Limited's financial also. Okay, if I'm talking about that. So at the time of consolidation or at the time of acquisition, A Limited, suppose H Limited, parent company, there will be a date at which the parent company would have purchased means would have made an investment in that company. For example, date of acquisition. Suppose date of acquisition, I'll write it over here, 1st Jan 2022. Okay, if H Limited over here, let's take the parent limited means holding company, H Limited has purchased on 1/1/2022 some A Limited. Okay, they have purchased A Limited. Cool. Now, on this date of acquisition, parent has to do what? Obviously, we know if the parent is going to purchase some company or have to acquire some company, then the parent has to pay now. What parent has to pay? Parent has to pay purchase consideration. The parent has to pay the purchase consideration, that is in cash. Okay, so how much cash they will be paying? So for that, now everybody will be telling, ma'am, we have to see A Limited's balance sheet, we have to see A Limited's financial position. What is the criteria of A Limited? Where is A Limited standing? Okay, see, for that I have to figure out A Limited's financial statements. So for example, I'll write it over here. It is A Limited's financial statements. Okay, in financial statements we have non-current assets. Let's say non-current assets are there. Under that, let's say PPE is there, some land. Oh, land no, so let's take some investment property, etc, 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 etc. Some current assets, it will be like cash, equivalent, bank balance, everything. I'm just taking a rough expenditure. Yeah, for property, plant and equipment is worth like 15 lakhs. Cool. Okay, my investment property is worth 20 lakhs. Yeah, my other current assets are worth like 5 lakhs. Cool. So my total assets over here, my total assets will be shown at 30 lakhs. 40 lakhs. Yeah, my total assets are shown at 40 lakhs. Then, is it just for the assets you are going to pay? Yeah, if it is 40 lakhs, the asset of A Limited, and we have to consider ourselves as H Limited. Okay, we are the parent. Okay, so if that company I want to purchase is having an asset of 40 lakhs, then are you going to pay for 40 lakhs? No, ma'am, we have to see what are the liabilities also. Yeah, so then we have to first of all understand, okay, so they will be having some equity. Yeah, so let's take, the company is having an equity of 8 lakhs. The company is having some non-current liability worth, let's say 15 lakhs. Cool. And some current liabilities worth, yeah, just give me a minute, I'm very bad at calculation. So 40 minus 8 minus 15, let's see. Okay, if it is 17 lakhs. Cool. Okay, so when we do the total calculations, my financial statements of A Limited is going to match. So basically the financial statements of A Limited is going to get tallied. Okay, so basically this will be the A Limited's financial position. So these are the assets, these are the liabilities. So if I just show you this much question, can you tell me, if you are a party, like H Limited, parent, and you want to purchase that company, and that too you want to purchase how much? 100%. If you want to purchase 100% share, you want to purchase, how much amount you will be ready to pay them? Think. How much amount you will be ready to pay them? Is it 40 lakhs? Yeah, ma'am, 40 lakhs, their asset is 40. Let's pay them 40. But then you will think, ma'am, what 40, ma'am? It is just, I am not purchasing only their assets, ma'am, they are having liabilities also. Tell them to first of all pay their liabilities. Oh yes. So I'll tell them, pay your liabilities also. So they'll tell, no, you only do whatever you want to do. So what I have to do is, I have to make a consideration, and on this acquisition date, I am going to purchase that company, which is known as business combination. On this date, on the very date on which you purchase a company, IFRS 3 comes into picture, that is business combination attracts. At this date, I have to take all their assets, all their outside liabilities, and find the figure what they are ready to be sold at. That is known as, we have to calculate the fair value of net assets. What is net assets? Net assets, or I can say net worth, or I can say equity. For example, I have to check what are the total assets minus outside liabilities. That is, the total assets are 15 lakh plus 20 lakhs plus 5 lakhs. Yeah, cool. Oh, it's percentage over here. Let me make it 0. Okay, so 40 lakhs. Yeah, what is their outside liability? Ma'am, they have to pay non-current liability also, and they have to pay the current liability also. Yeah, so it comes to 32 lakhs. That again means the company is having, the company over here is having 40 lakhs minus 32 lakhs. So the company's net assets are 40 lakhs minus 32 lakhs, which is 8 lakh, which is nothing other than equity. Hey, what it is? What do you mean by this? Just imagine now, if like I am the company, I want to purchase some company, right? And if that company is having so much assets and so much outside liability, I'll tell them now, first of all, pay your outside liabilities. Whatever is remaining, only that much I'll make a payment for. Same goes here also. We have to make a payment for net assets. that is identifiable net assets. So when I talk about identifiable net assets, again the thing comes over here is at what value should I identify? Should it be identified at a higher value or should it be identified at a lower value? For example, I have to find it out at a fair value. Hey, what is fair value then? So 8 lakhs to equity, I think you understood this. So this is a net assets. Now if I talk to you that these amounts, whichever the amount has been shown now, I'll just copy it and paste it over here. Hey, whatever these amounts they have shown now, it's the book value of that company, book value, or their carrying amount. Okay, that company's carrying amount are shown like that. But then do you think in the carrying amount will they be ready to sell their company? No. Acha, they'll say na, no ma'am. So they'll say, ma'am, investment property I have recorded at 20 lakhs, but you see, sell in the market, it will give you 45 lakhs. Oh, seriously? Yeah. PP, they'll tell, oh, 15 lakhs we have recorded, check in the market value. You know, investment property, there is an option cost or fair value. So maybe they have recorded at cost. So should I book at cost? So no. It's compulsory at the date of acquisition, all the assets are to be transferred and shown at the fair value. So okay, if I show at the fair value, 15 lakh will be as it is 15 lakh. 20 lakhs, suppose it went above at 45 lakhs, cool. Okay. And 5 lakhs is the same. Oh yeah. So if I take the total, if I just copy the total, my fair value will be 65 lakhs. Outside liabilities are same, this is also the same. Yeah. Even this is suppose 65 lakhs over here also, if it is 65 lakhs. So can you tell me what is the equity amount? That is 65 lakhs minus, oh I'm so sorry, 65 lakhs minus 15 lakhs minus 17 lakhs. So today 33 lakhs will be your amount of net asset. So now it's not just 8 lakhs that you have to pay. No. Now my net asset came around to be, net asset is 33 lakhs. Okay. Achha, did you understood this much? Yeah. Let me once revise the things. What is business combination? Like if I want to purchase some company, right? So that company is going to make their financial assets, show their financial position in such a phase that they can present a true picture. True picture of what? They'll be showing the true picture of their assets and liabilities which is relevant to the fair value. Yeah. So which is relevant at the fair value. So they can show at a fair value and we are obliged to understand what is the net assets. So total assets minus outside liability will be the amount at which I'll be ready to purchase the company. So okay, at this amount if I am ready to purchase the company which came around to be 33 lakhs, and if I purchased also and I paid them cash, for example I paid them cash, if I paid them cash of 33 lakhs, yeah, can you tell me what accounting entry I'll pass? I will pass, because now what I have to do, I have to make a consolidation. That means I have to take my balance sheet also, I have to combine their asset also. Yeah. So can you tell me what accounting entry can I pass? Yes, you are correct. I have to take all their net assets and I have to pay cash. So it's nothing other than, it is like that, net assets account debit to cash or to purchase consideration we can say. So it comes to 33 lakhs. Yeah, and over here also it's 33 lakhs. Cool. So that is the first accounting entry. Yeah, let me make it first. Hey, now in spite of this, what you did, you know, let's copy and paste it over here. Hey, in spite of that, you know how much cash you paid? You paid 36 lakhs. Oh, why? Why to pay extra? If that company is giving you the whole company, won't he expect something profit also for them? Yeah, ma'am. Even if he is going to give you the control, don't you think he is expecting something from you? Yeah, so he'll be expecting something from you. So what is that extra amount? See, for example, this is a scenario. What are you supposed to book an entry for? What is book an accounting entry for? So now I have to understand. This is my net assets. So I'll write net assets account debit. Net assets account debit. I'll be getting the value of 33 lakhs. So you will be telling, ma'am, you have to pay cash. Yeah, to cash. 36 lakhs. Ma'am, it is a loss for you. Loss debit. P&L charge. Is it seriously? Is it a loss? Yeah, ma'am, it's a loss. But should I book it as a loss? No. Why? Are Baba, just imagine now. Why are you paying them extra? Maybe because of the reputation that the company had, you may end up paying them more. If you are paying them for some synergy benefits that you are going to get in the future, it cannot be a loss today. No, it cannot be your loss. The extra amount which you are paying them in the sake and in the name of goodwill. So now we are going to make the goodwill. So goodwill will be the difference of 36 minus 33, which comes to be 3 lakhs. Students, do you remember what we understood a bit ago? That IAS 38, which is intangible asset, are not applicable to the goodwill. So goodwill is now to be recorded as per IFRS 3, which says that if the company is having the net assets and if you are paying them something more, that something more is nothing other than the goodwill. For goodwill you are paying, it's not a loss. Why? The market reputation will be good, for that you have ended up paying them more. But if I reverse the situation, that means let's copy the question, frame it for the third part. In spite of these, you made a payment of cash only 25 lakhs. Oh, so less. Yeah, so less. So I'll be very happy now. I'll purchase at a reduced price. For that company or whatever it is, I am getting at a discounted price. I am getting at a reduced price. I'll be very happy, isn't it? So 8 lakhs, I'll be happy. That's a gain for me. Hey, where is the gain going to go? And what is this known as? For example, if I pass the accounting entry, you will be telling me net assets account debit. Yeah. I'll take the net assets of 33 lakhs. Cool. But in spite of that, I'll be paying them only 25 lakhs. Yeah, I just paid them 25 lakhs. That means it's 2 cash. Cash went off 25. If I check out the balancing figure, ma'am, 33 minus 25, this is the balancing figure. That is something which we know. Is it a gain? Is it a goodwill? Ma'am, if it was goodwill, you would have paid extra, but you paid reduced amount. If it is reduced amount, it is not goodwill. It is, just imagine now, if you go and buy some shirt, if I told, my shopkeeper told this worth 1000 rupees, and if I ended up paying him only 800, I'll be happy. What I'll think, I bargained him. Yeah, I bargained the price. So that is known as over here gain. Oh, so sorry. To gain on bargain purchase. Means you are purchasing something and you are getting some gain on bargain purchase. So that is known as gain on bargain purchase. If this is a gain, that is a negative goodwill. Yes, it's a negative. So what should we do? We should charge immediately this gain into P&L account. It is immediately booked into P&L account. Yes. So this is to be booked in P&L account. I hope you understood this concept also. So this is what IFRS 3 talks about. Like, okay, if you are purchasing a company, you are paying them extra. Extra is goodwill. If you are purchasing something but you are paying less, that is a gain on bargain purchase. So basically, if it is a gain on bargain purchase, we'll be happy. So that happiness is not so longer. We have to pay tax on that happiness. That is, we have to book an income. That is a gain into P&L account, and accordingly the income taxes are to be paid. Yeah, that is cool. I hope you understood this. Hey, what's further? Everything over here, I calculated it for 100%. Yeah, 100%. Hey, can I change the scenario? I'm just copying it, pasting it over here. Oh yeah, I would have taken as a word. Just a minute. Copy, paste special. Let me do. Yeah. Yes, values I'll put. Okay, so cool. Okay, so this is basically the fair value of the company on which I'm gonna purchase. Okay, so yeah, just a minute more. So yeah, this is my total assets and my liabilities which I have returned. Okay, yeah, this is cool. Now this is for A Limited. If I want to purchase that company, but I told only 80% I want to purchase, only 80% purchase means only 80% I have made in investments. So by 80%, can I be the parent? Yes or no? Yes, ma'am. Because for being a parent company, It can be like more than 51%, which is normal. But then the control should be there with you. Yeah. By having so much of percentage, definitely I'll be having control. So 80% fine, ma'am. But what about 20%? Who is having 20%? So now let us understand what is NCI. That is non-controlling interest. Non-controlling interest, that means the one who do not have any control over that company. Who do not have any control over that company. It's just the normal investments which the company that NCI would have made. Okay, cool. Hey, how am I supposed to calculate? Everything you have to pay based on two parts. See, normally I'll tell you in the question what happens. Investment, like if I am the parent company, for me in investment I will shown it's an investment in so and so company, you had made so much payments, yeah, and then we have to find out what is the net assets of that company, what you were okay to pay but then you paid extra or reduced, so you have to formulate that. So initially they would always give you an amount. What is the purchase price? So they told for 80% stake you had paid them, like for example 13 lakhs. Cool. Okay, yeah, so you had made the payments of, let's not go with 13 lakhs, let's go with 43 lakhs. Yeah, you have paid them a payment of 43 lakhs. So much. Yeah. And for NCI, basically when I talk about non-controlling interest, my NCI is bifurcated into two parts. Means when I talk about the non-controlling interest, I have to mention on what basis my non-controlling interests are measured. So for measuring NCI, they have bifurcated into two parts. Over here, let me write it over here. We are going ahead with the first part. That's now which we are going. NCI is bifurcated into two parts, which is the proportionate basis, proportionate method, and another one that is proportionate, and another one is the fair value method. Okay, what is proportionate? Proportionate means the percentage. Can you tell me in the above question what is the percentage of NCI? Yeah, ma'am, 20%. That means 20% is a proportionate basis, and fair value is something else which I'll explain you after 2 minutes. But what is that proportionate basis? I have to find out in that company what is the portion of NCI which the NCI has to make a payment for. For example, if that company is having an asset minus outside liability, the net assets, in the question it is given the net assets which is equal to equity is 33 lakhs. So on 33 lakhs, yeah, that is on net assets. Net assets is equal to, again you remember, assets minus liability. So will be equal to again equity portion. Cool. So that is suppose 33 lakhs, yeah. So on 33 lakhs, what do you think my NCI should have made a payment? It is based on the proportion. So the proportion is only 20% is NCI ka portion. So NCI's portion we have to multiply with the value, that is 33 lakhs multiplied by 20%, which gives you 660 as the value for NCI. So NCI is liable to only pay 660 in the method of proportionate basis. So again that is very important, proportionate basis NCI has to pay 660. Cool. That means I got the value of NCI at 660. Cool. I got the value of 660. Yeah. So that means if I take the total, my NCI would have paid 660. Yeah. My parent would have paid 43 lakhs. So in total, in my balance sheet, in my balance sheet, there would be a total payment of what amount? There would be a total payment of 49,60,000. 4960. Now we are going to adhere like what could be my accounting entries. Now what is accounting entry? See, what many assets I took. Acha ma'am, your total assets you took was 33 lakh, your net assets. So I have to put an entry like net assets account debit, which you are going to get debit is 33 lakhs. Yeah, cool. In front of that, what you made? Arey ma'am, I paid how much cash? I paid cash. That is parent paid cash of how much? And parent has paid a cash of 43 lakhs. Yeah, it is just 80% stake. Hey, why am I crediting this paid cash? 80% you are going to have the stake now. That means that much equity I will be holding it, and equity's balance is always credit. Yeah, equity is having a credit balance. Or if I am reducing my cash, Cash is an asset with the debit balance, but when you are reducing it, are you not crediting it? Yeah. Similar goes with the paid cash. So I have to make my equities. So I reduced it. Hey, what about 20%? 20% my NCI I have to book in my financial statements. So yes, now 20% NCI I am going to book. So that is 2 non-controlling interest, which comes to 660. Okay, so this is what we have entered around. Okay, cool. Hey, do you really think what net assets you took and what the payment of 80 and 20% has been done to that company? Is it more? Obviously, ma'am, it's very more. It's very much. Hey, what extra amount you have paid? 43 lakhs plus 660 minus this. So 1660 is something you have paid extra. If you have paid extra, what is it extra known as? Is it a loss? Buck up. No, it's a goodwill. Exactly, for goodwill you have paid extra. So these will be the accounting entry. Goodwill account debit will be there. If I don't want to go into so much cumbersome, you can just do like that also now. See, your net assets was 33 lakhs total. Okay. Parent was having 80% control. That means out of 33 lakhs, now parent was supposed to make a payment of 80%. So parent was supposed to make 264, but parent made so much extra. Arey, what extra parent made? That is 1660 only. You can do like that also, like that also. Everything will work well. So yeah, the parent has made extra payment. So that extra is nothing other than goodwill. So this is the way the bifurcation of goodwill and the valuation of NCI at proportionate basis is understood. Yeah, I hope you are understanding the things here. Cool. Now what about NCI? Now proportionate basis to be understood. Yeah. Hey, what is fair value? What is fair value? When I go to fair value, we should understand, like for example, you only tell me, if I am the ABC company, I want to acquire XYZ. So XYZ company is having, for example, 1 lakh shares. 1 lakh shares. 1 lakh shares are there. And every share is valued at the price, at the rate of what amount? Let's say $1.5 per share. So basically their share capital would be 1 lakh into 1.5. Cool. Oh, I'm so sorry. It could be like 1.5. Okay. Yeah. So it will be 150. Yeah, that is sure. Now XYZ company is having 1 lakh shares. And I am the parent company. Okay, now you need to tell me how much holdings I will be having. For example, parent company over here. Parent company has purchased 60,000 shares. Yeah, I have purchased 60,000 shares, and there will be some other party, which is NCI, non-controlling interest, have purchased some 40,000 shares. Yeah. So what could be the ratio? Can you tell me what is the percentage of holding? Obviously, ma'am, 60,000 divided by 1 lakh. Yeah, cool. So I will be having 60%, and my NCI will be having 40%. If I am having more than 50%, I am the parent company of that company. Yeah. Until unless it's cool, I think it's fine. If that party is my NCI, now can you tell me, if it is a proportionate basis, then to we take net assets. But if it is fair value, what do we take? We consider the number of shares multiplied by the amount. For example, in the question they would have given, a parent company is making an investment of the rate of so much rupees. Like the parent company has made an investment, amount they would have given, for example, 75,000. Okay, yeah, 75,000. Yeah, cool. They wanted to make, no, not take 75,000. Let's take 95,000. Yeah, that will be better. Yeah, but NCI they told it is to be booked at fair value. What is fair value? So you'll check, ma'am, 40,000 shares are there. Multiplied by per share value is 1.5. Yeah, so multiplied by 1.5. So 60,000 is the payment, or the payment which the NCI has to make. So NCI is liable to have a paid of 60,000. And obviously for parents, they have already given 95,000. That works well. So in these, can you tell me what accounting entries can I pass? Okay, this is my net investment. Okay, net assets, all like the total assets, equity 150, parent paid 95, NCI paid 60. Cool. Can I write like this, net assets account debit? 150. Yeah. Balance of NCI is always credit. Why? At the time of consolidation, I'll tell you. Like if I am the owner, I am the equity share owner, my equity is to be returned in the credit side. Hey, am I the owner for 100%? No, no, no. If I am not the owner for 100%, some other percentage are there with other companies also now, for others also now. That others is nothing other than NCI. So that is also something which we show in the credit side. So if it is 2 NCI, what's the balance which is paid? So NCI has paid 60,000, and 2, if I check out the payment, what we made is purchase consideration. That is the parent is paid to cash. So over here it's 90,000, right? It's 95,000. Sorry, I'll just correct myself. It's 95,000. So 95,000 I paid. So if I just cut and paste it over here, oh, I'm so sorry. Yeah, we can write over here also. This is 40% and this is 60%. Do you think have you made any extra payment? Yeah, that is 660 plus 950 minus 150. You had made an extra payment of 5,000, and that 5,000 is nothing other than goodwill. So yes, here it is. So yes, we have to pass like this entry: goodwill account debit, net assets account debit to cash to NCI. So yeah, these are the two methods in which we normally book my my non-controlling interest. That is my NCI on the proportionate basis and the fair value. So over here in the fair value, I have to do what? I have to multiply shares, number of shares of my holding multiplied by the fair value. So yeah, I do get the fair value also. So I hope you are understanding the things. Yeah, as it is a revisionary part, we cannot go into details a lot, but yeah, I hope we are going ahead. Okay, now we are very good enough to start with what is an actual situation in the consolidation. Let's see. If this is ABC company and over here that is XYZ company. Yeah, let's see. Okay, there are certain assets. Okay, there are certain assets. Yeah, and over here there are certain liabilities also. Yeah, liabilities. See, I'm not considering the total, it's just that I'm writing the valuation. Yeah, so not in all. Okay, suppose over here this company, now we want to purchase XYZ company. I am interested into purchasing this company. If I purchase this company, for example, if I purchase 100% of the company, so I will be the parent company, ABC will be the parent company, XYZ will be what? My subsidiary. Yeah. When we understand consolidation, ABC company is going to prepare its financial statements, XYZ also it's going to prepare its financial statements. Then what are you going to club? We as an ABC company are going to take our total assets, our total liabilities, plus their total assets, their total liabilities are also to be added into my account. That means I have to combine my financials, your financials. I have to combine my profit and loss account, their profit and loss account. Say for example, in this question, let's take assets of that company are for example 100. Okay, I'm just considering. Liabilities, let's take liabilities at the rate of equity and other liabilities. So let's take equity and other liabilities. Let's say other liabilities are like 20. Okay, other outside liabilities. So what is equity? Ma'am, 100 minus 20 obviously will be the equity. So this equity is nothing other than the net interest, but this is what? This is for the parent company. Cool. Hey, what about XYZ company? Let's take, I'm just like writing the things as it is. Let's say their assets are 50. Their outside liabilities are, let's take 10. So maybe the equity will be 40. Yeah. So can you tell me, if you want to purchase 100% shares of XYZ company, what amount you should minimum pay to them? Minimum means minimum. That is net assets. What is net assets? Assets minus liability, which is 50 minus 10, which is 40. Cool. So you are supposed to pay minimum 40. So 40 is your net assets. That's cool. Hey, over here now, let's say I am preparing a consolidated statement. Just what I'll do now, I'll just cut it and paste it over here. If you're preparing, sir, ma'am, the consolidated CFS, balance sheet if you're preparing, tell me now what amount you're going to write in the assets. Yeah, ma'am, so we now obviously do what you know, P plus S. Okay, what is P plus S? Parents plus subsidiaries attached. Parents and subsidiaries we are going to attach. Simple. If I am going to attach parents and subsidiary, what is my total assets? Over here 100 plus 50. Cool. Ma'am, equity 80 plus 40. Cool. Over here 20 plus 10. Yeah, cool. If you take the total 150 and 150, tally it. Such a simple thing. Yeah, such a simple thing. When you are purchasing 100% subsidiary, 100% is with your hand, only then it is cool. But let's take this example as it is, but then we are going to change one thing. I just copied it. Let me give me a minute. Yeah, just a minute. Yeah. Suppose I copied it, but what I did, you know, I'm just removing it all. Say for example, over here you're purchasing not 100%. Sir, ma'am, we are purchasing only 90%. Then what is my asset? Like, okay, so ma'am, you are purchasing only 90% of that company. Yes. So remaining 10% are with the NCI. Yes. If I am doing so, can you tell me how much asset will I book in the consolidation? Simple, ma'am. P plus S now. 100 plus 50 total asset into 90%. Yeah. Similarly, 41, 45. Over here also 80 plus 40 into 90%. Cool. Over here also 20 plus 10 into 90%. I'm so simple. Yeah, 145, 145. Do you really think it is 145, 145? Means over here my asset are 100, over here it's 50. So it should be 150. But you wrote only 145. Do you really think you have made it correct? Think. Have you made it correct? Yes or no? So I have to think, acha. Ma'am, but you have taken only 90%. If you would have taken 100%, I would have totally added everything. But we took only 90%. Then what full we have to take? We cannot take full. I'll tell you. All the assets, all means all the assets and liabilities are to be taken full. Remember, you don't have a right for full. I don't have a right for full. But am I not only the parent? Yes. If I am the parent, I want to show my users, see, this is the total assets. And see, this is the balance of NCI also. So I have to take complete assets, complete liabilities, and then show, this is the balance of NCI. That means, you know, over here, this is wrong. This is totally wrong. In this equity, when I'll add it, I will show this is an equity for my company. Along with that, in the equity, I have to show this is 90% equity in this company, and remaining equity, that is NCI, will be having the balance of 10% in that. So that becomes my liability. Hey, how am I going to do? That means asset and liability, everything take total. For example, asset, yeah, equity, let's see, liability also I took it full. Yeah, but how much equity will I take? How much equity? For that I have to make a payment. See, that is very important. Why? We have to analyze. In this 40 net assets, what is parent going to pay? What is my NCI going to pay? See, XYZ company. So I told you now, before consolidation, we have to find out IFRS 3. That is on the date of purchase. On the date of acquisition, the net assets are 40. So net assets are suppose 40. Okay. And parent is having 90% control. Yeah. My NCI is having 10% control. So what will be the situation? 40 into 10%. Cool. And 40 into 90%. That's too cool. So 36 and 4 is to be taken care of. And that is only to be added. Hey, that means only this much portion is ours. Yeah. So in equity, we can add only our portion and not theirs. Okay. That means in this equity, I'll add 80 plus 36. And over here in NCI, 10%. So I'll be adding it over here, the 4, whichever the valuation based. So when I take the total now, even this will be 150. NCI plus other and my balance. So it's 150 and 150 which gets tallied. Why am I doing so? Because see, if I am the parent, so I want to make my financials a full-fledged, right? If I want to make my financials a full-fledged at the time of consolidation, so I cannot cancel, oh, this much assets portion is mine. No, this much portion is yours. No, Baba. Take full assets and figure out what is the net assets. Okay, the balance, that is assets minus outside liability. So equity portion. Out of that equity portion, which is the portion which we need to allot it to non-current interest and non-controlling interest and to the actually controlling power, that is the parent, and that is how we bifurcate it. Okay, so I really wish you would have understood this. Yeah, so this is what is the initial concept of what is the business combination and the balance sheets. So do you think is it so simple to be done? So no. If I go ahead and if I tell you, for example, at the day one, when you are purchasing that company, on the day one, at the date of acquisition, suppose ABC company want to purchase XYZ company. XYZ company is, say for example, you have purchased it on 1st Jan 2022. Yeah, cool. 1 Jan 2022. XYZ company is already having assets, liabilities, assets worth, for example, total assets 15 lakhs, cool. XYZ company is having a liability. In that liability, it is having an equity worth 2 lakhs, cool. Over here, 3 lakh is the retained earnings. Retained earnings means already they have earned something like P&L account. Yeah, already extra. And then they are having some other liabilities also. Other, which could be like 10 lakhs. Yeah. So by now we have completed 15 lakhs. Yeah, cool. So then my assets and my liabilities are going to get tallied. Yeah, that's cool. Now, can you tell me what will be the net assets? Net assets are total assets minus outside liabilities. That is equity portion. So what are the things which are included in the equity portion? In the equity portion, what are the things which are included? So if I check out, it could be equity, shares capital, yeah, yes. Then it could be reserves and surplus, yeah, cool. Then it could be some retained earnings, yeah. If there are any dividends, we need to remove it. That means initially when I have to make them a payment, I have to make a payment for 2 lakhs and 3 lakhs. Hey, what it is? Check out about the net assets. Net assets is equal to assets, total assets, minus outside liability. Others are 10. So 5 lakhs will be the net assets. That means the equity portion. Hey, why I have to make a payment for retained earnings also? Hey, because if you are acquiring that company and they are having some profits, have you did any hard work for earning for them? No, we have not did anything. They themselves has earned it. So if I want to take their earnings, even for that I have to make a payment. So over here, when I talk about the net assets of 5 lakhs, now the parent has to make a payment of 5 lakhs. So that is even the retained earnings, even the revaluation surplus and all things we have to make a payment. Yeah. But I tell you one thing, for example, things happen like in the current year, I understood that retained earnings at the date of acquisition on this date, suppose they already had a retained earnings, they were having an earnings, opening earnings, they were already having, like they brought forward, they had an earnings of let's say 1 lakh. And in the current year, their total earnings, suppose this is by year end, the total earnings is 3 lakhs. Now can you tell me what is the net assets on the date of acquisition? So this becomes very important. This is the retained earnings. So what am I supposed to do is, I'll find out over here my retained earnings are totally 3 lakhs. Okay, 3 lakhs is the closing balance. My opening balance is 1 lakh. That means at the date when you made a purchase now, at that date they were already having 1 lakh as the profit. For that you have to make a payment. For that you have to make a purchase consideration, means you have to pay them. Hey, but the difference of 2 lakhs, that is this. For them, why are you not paying them 2 lakhs? At the date of acquisition, they were having 1 lakh. Then I purchased the company, right? Then I started working with the company. I started working for the company, right? So even this profit will be termed as my profit. So on my profit, why will I pay? Agreed. So this profit is known as a profit which is post-acquisition profit. And the opening profit is known as pre-acquisition profit. Pre-acquisition, and over here it is post-acquisition profit. For post-acquisition profit, I will get my earnings, like P will also, like parent is also going to earn something. Parent will be having its own profit. Their share we will add it. We will add it, the total parents and subsidiaries profit. But before I acquired that company, before I acquired my subsidiaries company, they already had the profit. That means that is pre-acquisition profit. For that I cannot, like that, for that I don't have a right to get the gains. No, but ulta, I have to make them a payment. In spite of that, I have to make a payment for them. Yeah, that, see, this is an amount for which I have to make a payment. Why? Because I want to acquire your company. So yes, I hope you are getting the things clear. Yeah. Okay, so when I talk about this, we have to do, first of all, the first step. The first step is to calculate IFRS 3. Yeah, that is on the date of purchase. After purchasing, then we need to know whether there is any goodwill, yes or no. If there is any goodwill, yes or no, accordingly we bifurcate it. Cool. Then we start preparing, we check it, what is my percentage of holding. Yeah, I understood. So my percentage of holding is 80%. Then parent subsidiary relationship happens. Hey, but if my percentage is 25%, yeah, should I start consolidating? Should I check, my balance sheet, my assets, their assets, my assets, their assets? No. If you don't have a control, why are you including their financials into yours? Not allowed. Then what I should do? Then I have to take my financial statements as it is. In the investments, I have to mention, in the investments, I am supposed to record investments in associate, and then I will book some amount at whatever price I made the payment for. So this is known as IAS 28. So before I go with the questions, that was pre-planned, and this is something which I am expecting to be done at like for tomorrow. We can just go ahead with the PPTs and can wrap it up. Yeah, it's easy. See, it's easy. But the concepts you should know, the formula you should know, the base you should know. Rather, I'm telling you, literally SBR is the simplest professional level paper, because it is something which we have been learning it since 11th standard, literally. And I think more than that, like everybody is knowing what is asset, what is liability, where should be accounted. It's very easy. Yeah. Need not worry. Yeah, we are going to go ahead with the revision. So financial statements of group of entity. When I talk about group, I know what is group. Acha, group consists of what? Ma'am, parent, subsidiary, associates. Yeah, joint ventures. So over here, we are going to have a revision of statement of financial position, profit and loss account, OCI, about associates.
just standardize ചെയ്താൽ മതി ആ കാര്യങ്ങൾ. അതിപ്പോൾ എനിക്കും അതാ ഫോൾഡറിൽ അങ്ങനെ തന്നെയാണല്ലോ. അല്ലാതെ ഏതാണ് ഏത് ഫോൾഡറാണ്? അത് മനസ്സിലായി. പക്ഷെ അതിനകത്ത് തന്നെ ക്വസ്റ്റ്യൻ, ആ ഫോൾഡറിൽ തന്നെ ക്വസ്റ്റ്യൻ 1 ടാക്സ്, ക്വസ്റ്റ്യൻ 2, ക്വസ്റ്റ്യൻ 3 ഉണ്ട്. ഇല്ല, ഞാൻ അതിന്റെ മേലെ നോക്കി, അതില്ല. ചേച്ചി പേജ് നമ്പർ അല്ലെങ്കിൽ പേജ് നമ്പർ ഏതാണെന്ന് കിട്ടിയാൽ മതി. 3.8, 3.1 എന്നൊക്കെ പറഞ്ഞിട്ടില്ലേ? അത് പിന്നെ ചേച്ചി ഹലോ. ഈ എഫ്എമ്മിന്റെ ടൈപ്പ് സി ക്വസ്റ്റ്യൻസ് എന്ന് പറഞ്ഞാൽ നമുക്ക് അയച്ചു തന്നിട്ടുണ്ടല്ലോ തിരിച്ച്. ഇന്ന് രാവിലെ അയച്ചതിലുണ്ട്. പക്ഷെ 14th വരെയുള്ള കംപ്ലീറ്റ് ഉണ്ട്. തിരിച്ചു തന്നതിൽ എല്ലാം കിട്ടിയിട്ടുണ്ട്. അപ്പൊ 16th ഈ എഫ്എമ്മിന്റെ ടൈപ്പ് സി ക്വസ്റ്റ്യൻസിൽ ആ ഫയൽ നമ്മൾ അയച്ചു തന്ന ഫയലിൽ 4 ക്വസ്റ്റ്യൻസ് ആണുള്ളത്. അതിലൊരു ക്വസ്റ്റ്യനെ നമുക്ക് തിരിച്ചു കിട്ടിയിട്ടുള്ളൂ. ആ 16th ടൈപ്പ് സി ക്വസ്റ്റ്യൻസ് എന്ന് പറഞ്ഞപ്പോൾ ഒരു ഫയലുണ്ട് എഫ്എമ്മിന്റെ. അത് ഞാൻ തിരിച്ചു തന്ന ഫയലിൽ നിന്ന് ഇപ്പൊ ചെക്ക് ചെയ്തപ്പോൾ അതിൽ ഒരു ക്വസ്റ്റ്യൻ ആൻസറേ ഉള്ളൂ. ഒരു ക്വസ്റ്റ്യനേ ഉള്ളൂ, ക്വസ്റ്റ്യൻ ആൻസറേ ഉള്ളൂ. എക്സൽ ആണ്. എങ്ങനെ ഷീറ്റ് മാറ്റി നോക്കി ഒറ്റ സെക്കൻഡ്. എന്നിട്ട്
So I've got a gist of the basic of the file that is
okay.
As well as in Canada.
Okay, sorry.
So help me understand this. Give me a
page mistake on the page number of
time when you have faced the problem, right? In your daily operations, like being handled or by you. What is the daily operational problem that you face, and how were you able to resolve it, or what was the decision that you took which helped resolve it? everything. I completely heard what you have said. Have you also been very much involved in KRA, for team members? So what were the cases that you majorly looked at something like that?
with my internet.
ആരാണ്
Jackie Padway.
So what's your
എന്താണ് there is
3-year plan
Some
for
problems with my
IIC?
internet.
നൈസ് ആയിട്ട് വൈൻഡ് അപ്പ് ചെയ്യാം
കഴിഞ്ഞോ
അല്ല
തുടങ്ങിയോ അല്ല പുതിയ
there is some problem with my internet. I don't know what. ഇവിടെ കുഴപ്പമില്ലടാ ലൈവില് കുഴപ്പമില്ലല്ലോ
ചിലപ്പോൾ ടൈം എടുക്കും.
അതെ എനിക്കാണോ ഉറങ്ങുന്നത് മാമിന് പോയിട്ടാണോ
മാമിൻ്റെ എൻ്റെ
പെട്ടെന്ന് അതിന്റെ
9 മണിക്കൂർ
ഒരു മണിക്ക് പക്ഷെ കുറച്ചും കൂടി എക്സ്റ്റെൻഡ് ചെയ്യാൻ ചാൻസ് ഉണ്ടെന്ന് പറഞ്ഞ അതുകൊണ്ട് 2:30 ആക്കിയത് 2 മണിയുടെ ശരിയാ കറങ്ങിക്കൊണ്ടിരിക്കേ എന്താ പറയാ ജാനകി മാമിന് ഏറ്റവും എല്ലാം അങ്ങനെ ചെയ്യും
ഞാൻ മെസ്സേജ് അയക്കാൻ നിൽക്കരുത്. എടാ എന്താ പറയണ്ട ജാനകി മാമിനോട്? ജാനകി മാം വിളിക്കാം. Yeah, ma'am. Yeah, ma'am, I saw that. So I think it's almost one o'clock. It's time to end the session.
The role that you played for the app development and implementation.
Okay, so I think it's fine to end. Yeah, thank you. Yes, ma'am. Stop streaming and end broadcast. End broadcast. Yeah. I didn't get you, ma'am. Yes, ma'am. 1 minute. OBS center.
Hello? Hi. What happened, ma'am? Now it is only one watching. Only one. That is me, I guess. No. You are saying that your when your internet is connectivity gone, that part, right? Okay, we'll see what we can do. Okay, now it is okay, right? Okay, have you entered the live? Okay.
പോയി എന്നോട് OBS-ൽ എന്തൊക്കെ ചെയ്യാൻ ചോദിച്ചു. എന്നോട് OBS-ൽ അവിടെ അങ്ങനെയൊക്കെ ചോദിച്ചു.
യൂട്യൂബ് ലൈവില്ലേ, ഇതില് ഈ ബഫറായി പോയ സ്ഥലം കട്ട് ചെയ്ത് കളയണം.
നമ്മളിതെന്തായാലും ഇതിന്ന് കളഞ്ഞിട്ട് മറ്റേ ചാനലിലോട്ട് ഇട്ടുപോലെ. LMS അല്ല, മറ്റേ ചാനൽ. ഇതിപ്പോ ഏത് ചാനലാണ്? ക്യാമ്പസിന്റെ. വേറെ വഴിയില്ല. ഇതിപ്പോ ഇങ്ങനെ
വീഡിയോ കാണുന്നില്ല.
So what have you done using Expert?
Ma'am, there is no problem. I have just checked it on YouTube.
So with the data that you got from Expert, you should create something for your management to take a look at. What is the current get you?
Actually, everything. No, ma'am, there is no problem. I have
Okay, lovely. I think I have a brief picture and understanding. This is just the first interview. Maybe if I require something, I'll still be connecting with your partner. Let's close it with the three things. Three things more. Two things is for me and one thing is for you. So, first thing is what is the kind of notice period that you have with Canada?
Check. Time checking. Okay.
What is your current take home?
Yeah, the last 15 minutes is not recorded. It
And
is
what
on
was
that.
it by this? Okay, so that's point one. Point two, will you be willing to relocate the position? If,
Yeah, you have to start from the part where it can go on black. I guess. Yeah. Oh,
Okay,
yeah.
then
You
that's
have
it from
to
my end.
start from that
Any
point.
questions that you want to ask me or Lakshya regarding this interview or the job profile, job role?
Mm. Mm, okay. Okay, ma'am. You just have to continue from that point, okay? Okay. And I have just sent you a message in the WhatsApp. Please check it, okay? Yeah. Huh. That means
Okay.
can you please send it full version, okay? Ma'am, it's actually 2.1 and 2.2 does not 2.1 and does not, okay?
Great question. The first one is basically a template question, right? The job roles and the responsibilities. So, yes, you are right. This interview is for the back end operation. Lakshya was working, has been working in the tech
Okay,
industry
does not the condition is here in the 2.2, right?
2020 once COVID hit, we actually had to move out of the offline classes and we had to move online. That was the post movement into our online section. But ever since that range and even after our offline batches were started in 2021 January, our online operations were still going
Yeah,
very
yeah,
strong.
yeah.
So in the month of June last year, we actually separated our operations to online and offline. So offline, we are currently having across 6 cities in Kerala. We start from the north, Kannur, Calicut,
Okay,
Thrissur,
ma'am.
Ernakulam, and to the south, Kottayam and Trivandrum.
Okay.
These are the cities that we have. We have our offices also in Bangalore
Yeah,
and
you're working on it, man.
we are closely
You'll
going
connect
to
with
start
you.
offices in Mumbai and Chennai.
You'll connect
Mumbai
to
and
you.
Hyderabad, Mumbai and Hyderabad is coming
Oh,
4 to 5 months. Right?
thank you.
So because online operations still going, we currently have an active student base of
എന്താടാ?
around 2,000 plus students coming in from
ആരാണ്
CMA
അശ്വിനി?
US, international courses
എന്ത്
as well
പറ്റി?
as Indian courses. If you look at Russia, one thing that you will find very different from our other commerce tech institutes is basically most institutes either provide the best learning in CA or CMA or something, or they claim that they provide the best learning in international courses like ACCA, CMA USA. You just looked at maybe some of the competitors before you applied, before you came for the interview. You would have seen certain names like Zell, you would have seen certain names like Embark or Chennai based to report these companies who are giving the Indian courses. But we're the only company in India who provides equal importance and also has equal student strength. Lakshya is the largest tech company in India with the highest number of ACCA registrations per year since 2019. And we are soon going to be the biggest tech institute with the most number of CMA USA experience. So once within the next 6 to 8 months, we are on a upward trajectory there as well. So when coming to the actual job role that we have to do, this is the background of what I'm saying, right? So that's a student count that we are working with. Online, we are having around 2,000+ students. We take all these courses, and all of our courses go through an online platform with the learning management system that we already have. So it's through the LMS that we provide. So back-end operations, basically,
And meeting
everything that needs to be set up in order for day-to-day operations to function properly, which already should be moving, right? So we have a student supported operations to take care of the day-to-day operations of classes, automation, subject-wise mentors, all these types of things, registrations and everything. Back-end operations, we will mostly be dealing with a higher picture of everything. It will include a little bit of sales, connecting with the sales team to make sure that our numbers are being brought up, that our targets are being achieved. It will be also a collaboration with the finance team, where we have RM finance members for the collection of our fees, making sure every batch collection is properly done. It will also include a little bit of making sure that our LMS is working properly by the of the LMS team, making sure all the resources are running properly, making sure that the requirements reports and that properly. There would also be a collaboration required with the marketing team to make sure that all of the batches that are going to start have their own marketing work coming. There will also be a little bit of training and empowerment involved, especially for teams from Bangalore, UH, and then Hyderabad, since all these teams are pitching for our online courses. Right? So they require training on the products, they require product training, they require updates that will be coming up as long as we are doing that. So these are the major operational one-liners. There are a lot of population activities that needs to be done in order to achieve all of it, right? That I think you might already know. So this is the basic understanding, and also first and foremost is student service, student support, and class support. Right? So we have a complete department, student and operations, student support and operations department. Anything and everything that they require, it could be maybe a class did not start in the morning, so they are around